Hi Pisces, good to see you. How you doing? How you been? You're the first one in today. Joe, good to see you. How you doing? How you been? Comatose, good to see you. How you doing? How you been? How's everyone doing? Good, bad, or just starting out your day? Kamal, good to see you, brother. How you doing? Toby, good to see you. How you doing? Viva la Trump. Let's go, Comatose. Dennis, good to see you. How you doing, brother? How you been? Blessings, Miles. Wonder, how you doing? Blessings. Lados, good to see you. How you doing? Ian, good to see you. How you doing? Evening. Good evening, Miles of CMF. Free and Feather, good to see you. How you doing? Stormy, good to see you. How you doing? How you been? Good evening, Miles of CMF. Mike, good to see you. How you doing? How you been? Let's do a breakdown of what we're going to be going for on tonight's episode by the time everyone tunes in for the first part. Miles, how much investment, if acceptable, to take for a bull run and become wealthy? Depends on your budget. Pablo, good to see you. How you doing? How you been? Hi, family. How are you tonight? Abraham, I'm doing great. How you doing, brother? How you been? I'm great. Be right back. I'm great. Let's go, Wanda. Hello, Miles. How are you? How you doing today? I'm doing great. Troy, how you been? How's things? So, Semper, good to see you. How you doing? Evening, how you been? Let's go through a breakdown of what we're going to be talking about on tonight's episode of the CMF Live. We're on episode 199. Episode 199 we're on right now. Absolutely incredible. So on tonight's episode of the CMF Live, we're going to be talking about rate cuts because the Fed, Jerome Powell, has decided to come out with some news. We're going to go through his speech, but in bullet points because it was quite a long speech. But we're going to go through Jerome Powell's speech and bullet points on essentially how the economy is going to be looking for the United States moving forward, and that rate cuts are actually helping the crypto space, as always. Then we're going to be talking about Coinbase and Solana and Bitcoin. Then we're going to go through the news topic on tonight's live regarding Detroit, because Detroit is going to be accepting crypto payments for taxes in their cities, for fees and so on. We can already see the transition that's happening essentially inside the United States when it comes to cryptocurrencies. Because if Kamala Harris won, that would have never happened in Detroit. So thank God, once again, that Trump won. Then we're going to go through the news topic on tonight's live regarding billionaires, corporations, and in general, the tax cut that's going to be happening over there and why it's actually a positive. Then we're also going to be talking about Galaxy Digital on tonight's live. Galaxy Digital CEO has never been a fan of Trump, but of course now he is because his company stock is doing excellent, and so is he. Then we're also going to talk about tonight's live regarding essentially we're going to be talking about Gary Gensler on tonight's live as well. Essentially, that Gary Gensler is very quickly going to be losing his chair. So some news topics to go through regarding Gary Gensler, some essentially announcements that came through. We're also going to be talking about Telegram on tonight's live as well, how Telegram is becoming an everything app. And that is a perspective that's coming out from another CEO. We're going to be talking about the SEC on tonight's live going after Kraken. It seems like the SEC and Gary Gensler have not learned from their lessons, and that Gary Gensler really wants to be thrown out the window by the looks of it. We're also going to be talking about tonight's live regarding the matters of institutions betting big on RWAs, in other words, real world assets. We're going to be going through the topic of real world assets and the perspective of BlackRock, Goldman Sachs, essentially, and so on. We're also going to go through the news topic on tonight's live regarding the matters of the US elections in terms of 2026 midterms. It seems like crypto companies are preparing not just for 2025, but also 2026. We're going to go through some of their bullet points and plans of what they're essentially establishing for 2026 matters as well. We're also going to be going through the news topic on tonight's live regarding JP Morgan. JP Morgan's analysts have once again came out on how they believe the market space is going to be playing out moving forward. It was actually quite a detailed report they did on JP Morgan. So those are the news topics we are going to be essentially talking about on tonight's live regarding JP Morgan's analyst reports, regarding essentially Gary Gensler, regarding SEC and Kraken midterms in terms of crypto politicians. There's actually quite a lot of crypto politicians now. We're going to go through the figures on that. But Fed rate cuts we're going to be talking about tonight's live, and essentially a perspective from CEOs and executives moving forward for their own companies and Wall Street in general. So, mixture of news essentially to go through on tonight's live. But let me just do one small little edit. Here we go. But before we go through any of those news topics, I just want to say to everyone, welcome to the CMF Live. If you're watching this for the first time ever, this is episode 199 of the CMF Live. On this live, we talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. We also do Q&As on this live, which means if you have any questions, put them down inside the comment section. I'll be more than happy to answer any questions you may have. I want to say to everyone, thank you so much to everyone right now because I'm getting notifications. That's if you're watching us on X, thank you so much to everyone that's putting a retweet on this live, who's retweeting this live, who's putting a like on this live, who's putting a comment outside of the live as well on X. And thank you so much to everyone on YouTube who's watching this right now, who's liking the video as well. Genuinely, thanks so much to everyone who's spreading this live show around. And the first news topic we're going to be going through on tonight's live is essentially regarding the Fed rate cuts. So we're going to go through the report and bullet points. But before we go through any of that, let's go to the comment section first before we go through the first news. Let's see what's going on in there. Then we go straight into the first news, which is Fed rate cuts, which is a massive positive for the crypto space. Evening, Miles and CMF. Manny, good to see you. How you doing? Let's go a bit more up. I think I missed a lot of people. Semper, good to see you. How you doing? Mike, you're doing good. Let's go. I do the Trump happy dance in my car when I'm driving. Let's go, happy Pisces. I'm great, bro. Let's go, Wanda. Morning, Miles of CMF. Shelly, good to see you. How you doing? Morning. Hi, mate. Paul, good to see you, brother. How you doing? Evening, Miles of CMF. Jason, good to see you. How you doing? Can 20,000 be enough? It's a great amount. Manny, good to see you. How you doing? Evening. I brought more XRP via upload 4 days ago, and it's just now hitting my cold wallet. Wow, that's a bit weird. That's very weird. Good evening, Miles and CMF. Orphan, good to see you. How you doing? Hi, Miles and family. Alex, good to see you. How you doing? How you been? EP200. I'm reaching out the champagne. Let's go, Mike. Good evening, Miles and the rest of the CMF crew. Good to see you, Frankie, brother. How you doing? How you been? How you been, Miles? I've been doing great. How you been? I hope we see green candles every day now. Well, by the looks of it, we are going to be seeing it because remember when I said cherry on top would be essentially rate cuts? I said a Trump victory would be amazing, which we got. And I said essentially having rate cuts on top of a Trump victory would be a cherry on top, which we're getting rate cuts as well, which is genuinely the cherry on top. Hello, Miles and CMF. Good to see you as well, Khan. How you been? Hello, Miles and CMF T. Good to see you as well. How you doing? Hi, Miles. Have you actually slept in the last few days, mate? Here and there, yeah. Now, first news topic on tonight's live is the Fed rate cuts, the cherry on top that I was talking about. Crypto markets stay in the green after a 25 basis point Fed rate cut has been announced. The Bitcoin and cryptocurrencies market maintain positive momentum going forward after the Federal Reserve implemented its first rate cut since Donald Trump's election win. On November 7th, the Federal Reserve announced a 25 basis point reduction inside the U.S. funding rates, essentially at this month's Federal Open Market Committee meeting, continuing the monetary easing started back in September with 50 basis point cuts. Now, here are the bullet points that was mentioned from Jerome Powell's statements today. He said that overall economic performance is strong, which is an absolute lie. Otherwise, you wouldn't be doing rate cuts. The Fed will continue to focus on its dual mission objectives. High inflation has eased significantly, and the labor markets remain strong. Of course, we're having a Trump presidency. The Fed's commitment to maintaining the strong economic growth. The Fed has taken another step towards reducing policy restrictions. We remain confident that inflation will continue to fall to 2% as the policy stance is adjusted. Recent indicators show that the economy is expanding steadily and growth in the consumer spending remains strong. The unemployment rate has fallen in the last 3 months and remains low. Hiring would essentially be in a slightly higher if not for the storms and strikes. The labor market is not a significant source of inflationary pressure. Improved supply conditions support economic developments. Labor market conditions are more comfortable than before the pandemic. Core inflation remains high. The Fed lowered interest rates today, further aligning its policy stance. The policy stance will shift to a neutral stance over time. The Federal Reserve will continue to make decisions on meeting-by-meeting basis. These are all the bullet points from that report today. Interest rate cuts will help sustain strong economic growth. The Fed may adjust policy limits more slowly or more quickly. Policies essentially are well positioned to address risks. If the economy remains strong and inflation does not fall to 2%, policy can be adjusted more slowly. Elections will have no impact on policy in the short term. The timing and content of the policy changes are unclear. It's so unclear how policy will impact the Fed's goals. We do not speculate, assume, or presume. Any new policies of the government or Congress may have a significant impact. These impacts will be considered along with other factors. We are keeping our eye on the rise in the US, essentially Treasury yields market space, which are currently far from previous levels. We will observe the trend of national returns. It is too early to determine the specific direction we're going. Ahead of the interest rate decisions, cryptocurrency prediction markets platforms Polymarket give a 99% probability. That's a probability that the Fed will cut essentially the rates by 25 basis points. Bitcoin remained above $76,000, and the total green market remained solidly the green essentially zones. Quite bullish right now in the market space. Wall Street surged after the meeting, while the CBO volatility index slightly dipped. However, cryptocurrency prices were generally unchanged from before the meeting. The social media commentators have theorized that FOMC decisions may have smaller impacts on digital asset prices moving forward. Meanwhile, prominents noted that the Fed removed language pointing to greater confidence on inflation. Speculators said that changes are likely to be due to the elections and possible alterations to monetary policies. Addressing the debates, Fed Chairman Jerome Powell said central bank regulators would not essentially switch strategies due to short-term inflation data or electronic results. The statement changes wasn't essentially designed to serve as a forward guidance, removing language from greater confidence on inflation. It is categorized as a drafting step. Jerome Powell's Federal Reserve Chair, just to point out, Jerome Powell is most likely going to be fired as well. A lot of people are going to be fired, and they should be. Jerome Powell is absolutely useless and a manipulator. Trump and Jerome Powell have notoriously butted heads over the Fed's approach to interest rates. Despite appointing the Fed chairman back in 2017, Trump criticized Jerome Powell for adapting a conservative rate environment. At the time, Trump claimed that Jerome Powell's policies slowed U.S. economic growth. Rumors have floated over essentially Jerome Powell's potential resignation once Trump takes office in January. Responding to questions to a post of FOMC press conference, Jerome Powell said that he wouldn't step down if asked by Trump. Imagine that one. Jerome Powell, the Fed chairman, the man that's been essentially one of the main causes of inflation, because he won't do rate cuts when he's supposed to do rate cuts, and he wants to pretend the market's doing excellent. During the essentially Biden administration, Jerome Powell lied to everybody. He kept on coming onto the news, on live news, and saying the economy is doing great. I don't know what everybody's talking about. It's what Jerome Powell kept on doing. He kept on stretching the numbers as much as he could to make the Biden administration look good, and kept on coming on the news and saying, we're getting close to our 2% inflation rate. We're getting close to our 2% inflation rate. The economy is doing great. While people couldn't afford groceries or pay their mortgages or essentially getting sort of loans, pay their vehicles off, the basic stuff to be able to survive in this society, nobody can afford. But Jerome Powell kept on coming on the news and saying, we're getting close to that 2% inflation. Don't worry, the economy is doing excellent. He was lying to everybody because he wanted to make the Biden administration look good during the election times, which didn't work because people saw through the BS that Jerome Powell was feeding people and how he's kept on stretching the numbers out. Donald Trump has said that he is going to be replacing the Fed chairman as well, which is absolutely amazing news. A lot of people need to be replaced inside the US government to make the US government strong once again. And Jerome Powell is one of those people. But apparently, Jerome Powell has came out and said that if Donald Trump tells him to step down, Jerome Powell will reject Donald Trump. I don't know how that one's going to play out because he is the president of the United States. And even if there are laws against removing the Fed chairman, trust me, there will be loopholes in every law. As there were loopholes to remove essentially Biden the last minute and replace him with OnlyFans Kamala Harris. If there's a way, there's always a will. Now, moving away from Jerome Powell's ridiculous speech, but positive for the crypto space because he's doing rate cuts. As I said previously, a Trump presidency is excellent news. And I said having rate cuts on top of that is even more better news as well, because it's cherry on top. That is why the crypto markets have stayed relatively green today, due to the Fed's speech of having some sort of a 25 basis cuts, essentially points which they're aiming towards. If we get the rate cuts in this year as well, the market's going to continue going forward bullish. Cherry on top, as I previously said. Now, moving away from Jerome Powell's speech to essentially Coinbase news. Coinbase, Bitcoin, and Solana is what's happening right here. Apparently, Coinbase wants to bring Bitcoin to the Solana network. But before we go through that news, let's go inside the comment section first before we go through that news. As I said, this is a live, which means if you do have any questions, put them down inside the comment section. I'll be more than happy to answer any questions you may have. Let's see what's going on inside the comment section. Let me go straight into the news of Coinbase, Bitcoin, and Solana. Hello, Miles and CMF. Connie, good to see you. How you doing? T, good to see you. How you doing? Adi, good to see you. How you doing? And my portfolio is so up to date, and it's been increasing. Yes, let's go, Stormy. Orphan says, I was expect a better reaction from the market about the rate cuts. 25 basis points is what's been suggested. We could get 50 basis points. The higher the rate cuts, the better the market will react. 25 basis points is moderate, but it shouldn't be moderate. We should be having some sort of drastic rate cuts happening. Otherwise, that bubble is going to get bigger. Brad's tweet today is fire. Yes, Brad, the CEO of Ripple, has been tweeting a lot lately regarding Gary Gensler getting fired, regarding Gary Gensler should be investigated, regarding that Trump should do something about that. And I agree with everything Brad has said. But you know what's strange? Even though Gary Gensler knows he's going to be fired no matter what when it essentially happens around January 20th, he still doesn't care. Gary Gensler is still doubling down on the crypto space, even though he knows he's going to be guaranteed fired January 20th onwards. Even today, he raised more essentially issues against Kraken. Gary Gensler and the SEC have decided to essentially, which we're going to go through on tonight's live as well, that news topic, but he's decided to go against Kraken at a rapid pace, knowing he's going to be fired, knowing that his methods don't work. He's still being stubborn. I guess some people don't change. Hello there, Miles and CMF. Ray, good to see you as well. How you doing, brother? How you been? Good evening, Mal. Good evening. How you doing, Callie? Miles, how are you? I'm doing great. How you been? Miles, is it true that by second quarter of 2025, USA will be in recession because of rate cuts? No. Rate cuts need to happen. A recession is always something to look, it's something that you can't, it's very difficult not to get into a recession because every country is ridiculously doing quite bad. And it's only because our governments went that way. They went down the path of spending. And when it came to time to pay up and fix the economy, they had nothing left in their wallets. So the recession is something that is going to be heading towards every country. Now, some countries might be able to maintain the recession so it doesn't, burst into this massive bubble. Some countries will not most likely be that lucky. Germany's massive bubble is quite bad. The automotive industry that keeps Germany's economy up and running is what's damaging it the most. The real estate space in France is not doing too well, and that's going to be damaging France's economy. And Germany and France are the only two countries keeping the European economy strong. So if Germany and France go down, the EU goes down with it for a while until they get back on their feet. But they can essentially not go down that path if they fix their spendings. If the EU stops sending random money to random countries that can never afford to pay them back, and instead they spend that money on their economy, they can stop themselves from going to a massive bubble, something that Trump is going to be achieving January 20th onwards for the United States by stopping the unnecessary spendings, by firing the unnecessary politicians in departments we don't even need. So there are ways to curb a recession scenario or to maintain it so it doesn't become this massive bubble. But unfortunately, some politicians are not that bright. Trump, on the other hand, he is extremely intelligent and he will decide to curb the United States so it doesn't go towards a massive bubble. Now, some news outlets are suggesting that if Trump does do rate cuts, then we're going to be heading towards a massive recession. And they're blaming it on Trump's rate cuts instead of blaming it on themselves. Trump hasn't even entered, essentially, his presidency seat, which is going to be along January 20th onwards. But what's happened in the past Nothing to do with Trump. The reason why we're even heading in towards recessions is not because Trump's going to be doing rate cuts. The Fed's already doing rate cuts. It's got nothing to do with Trump. The news is lying to everybody, telling people Trump doing rate cuts will cause a recession. No, we were already heading towards a recession. It's just you kept on hiding it from the news. And the Fed was already doing rate cuts. We had rate cuts before even a presidential election. So Trump's rate cuts aren't going to be the reason we head towards essentially a recession. It's what happened in the last 4 years that's heading us towards a recession, not Trump. So don't listen to the news outlets that are telling people Trump's rate cuts are going to be causing recessions all around the world. Wrong. The last 4 years is the reason we're heading towards a recession. Nothing to do with Trump. And rate cuts, the Fed's been doing rate cuts since the beginning of the year. And Trump had nothing to do with that. Rate cuts is something that's going to be continuing forward, nothing to do with Trump. So heading towards a recession, nothing to do with Trump. It's the last 4 years. We're paying for the last 4 years that recession is heading towards us. So regarding the news, or essentially the sources that are telling people that the second quarter 2025, we're heading towards the recession and so on, because it's got nothing to do with that. Nothing. A recession is something that's going to be happening due to the last 4 years. Now, there are ways to maintain it. There are ways to curb it. That's only to essentially stop unnecessary spendings. Gary Gensler has got something up his sleeve, by the looks of it, before he leaves. Miles, what can we expect early 2025? What can we expect early 2025 essentially is policies and regulations. We're going to be expecting early 2025 a lot of politicians getting fired with unnecessary job titles. We're going to be expecting a lot of, essentially, mostly inside the United States, we're going to be expecting a lot of policies, a lot of regulations, a lot of people getting fired and replaced. Good. And then after that onwards, we're going to be seeing the markets climb in numbers. The crypto space market is going to be climbing because there's going to be a lot of innovation happening. Wall Street is going to be all over the crypto space. About 3 days before the US elections, a billionaire hedge fund from Wall Street did an interview on Bloomberg, which is like gospel for the entire Wall Street and every other financial market space around the world. He did an interview on Bloomberg and he said that essentially Wall Street has priced in a Trump victory, and that Wall Street is ready for innovation, and that Wall Street is heading towards the blockchain space. They want to go towards Web3. He said that Wall Street is pretty much ready to go. He's a billionaire hedge fund in Wall Street. He said Wall Street is ready for Web3. Wall Street is ready for AI. Wall Street is ready for blockchain technology and innovation. We want to go forward with this. But they were trapped. Why were they trapped? Because of Biden administration, OnlyFans Kamala Harris, and the FDIC committee and Gary Gensler. No longer are they trapped. So 2025, people getting fired, regulations and policies, Wall Street moves forward, brings confidence to the table of blockchain. When the United States brings confidence to the blockchain space, that means that every country around the world is going to be getting into, essentially, even the ones that haven't entered inside the crypto space, or the companies around the world that haven't entered the crypto space, they're also going to be entering as well, because America brings that confidence to the table. When the American markets move towards a market sector, the rest of the world will follow. It's very simple. So 2025, regulations, policies, a lot of people getting fired, a lot of changes happening, but they're all positive changes moving forward. And the biggest one is going to be the confidence that it brings to the table, because by Wall Street bringing that confidence to blockchain, Web3, AI, and so on, it's also going to bring confidence from VC companies, which already announced the news yesterday. VC companies are already getting essentially excited about entering the crypto spaces January moving forward. The first quarter of 2025, VC companies are already getting ready. Venture capitalists, they're getting ready to start investing in Web3 companies, start investing in AI companies. So not only is money going to be entering from Wall Street side or high-profile investors, but money is also going to be entering from venture capitalists funding blockchain projects from the ground up, which is all amazing. So 2025 onwards is just going to be a blast for essentially the blockchain space. It's going to be an absolute amazing blast. And as I said, whatever happens inside the United States affects the rest of the world. So a positive United States means a positive for the rest of the world. Like I said, I think he will just do it out of spite. Regarding Gary Gensler, probably he's doing it out of spite right now. Even though Gary Gensler, as I said, he knows he's going to be fired, he's going after Kraken again. The guy knows, Gary Gensler knows he's going to be fired, guaranteed. But he's going after Kraken today. And do you know why Gary Gensler is going after Kraken? We're going to get into more detail on that matter as well today, later on. But Gary Gensler, here's the gist of it. Gary Gensler is going after Kraken because Kraken is suing the SEC for not bringing out regulations. And Gary Gensler and the SEC today filed a motion against Kraken to dismiss the allegations from Kraken that Kraken is saying the SEC did nothing for the crypto space. How those allegations? Gary Gensler brought no regulations and no policies whatsoever and brought 100 lawsuits to the crypto space. And Gary Gensler and the SEC are trying to dismiss the allegations coming from Kraken that the SEC did nothing for the crypto space. You did do nothing for the crypto space. Even when he knows he's about to be fired, he can't do the right thing. He still wants to go up ahead and lie on purpose. That man has no honesty whatsoever, not a bone of honesty in his body. We talked about this the other day inside the CMF regarding Gary Gensler. Yeah, he might just do it out of spite. He will inflict as much pain as possible before he gets kicked out. I agree, Shelley. Facts. Germany's chief fired the Ministry of Finance. Makes sense. Definitely makes sense why he did that. There is a legal document showing Gary Gensler's under investigation as of September 10th, 2024 by Jim Jordan Judicial Committee and Patrick McHenry Committee of Financial Services. Both have signed the investigation letter. That is true. Yes, that is very true. Then I guess Zelensky will suffer as he won't be getting his $60 billion per visit finally. The money that's been wasted on countries that will never be able to pay it back is going to be stopping. Hi, Miles and CMF. George, good to see you. How you doing? How you been? Trump has got 2 months ahead of everybody before he gets into the White House. Do you know how many bills he's put together already? He's put a lot of bills together already, but he's already picked the best part about Trump is he's picked the perfect people to lead certain sectors inside the US government. With Elon Musk essentially being in charge of one department for clearing up the United States in terms of politicians, and then you have Robert F. Kennedy for health department, which makes a lot of sense, and then you have Vivek Ramsey for the essentially blockchain departments. So in general, he's picked the A-star team to lead the United States. He hasn't picked the usual characters that stand behind politicians. You know, Kamala Harris had the usual characters standing behind her, the oil companies and the gas companies and the war companies and so on, the pharmaceutical companies, the ones that tell them to do the same things every year onwards. Trump has got an A-star team behind him who are ready to essentially clamp down on work that needs to be done. And he definitely has his plans going forward, which is going to be better. He has the A-star team, not the B-star team, which everybody keeps on using. The pharmaceutical companies that tell you what to do by lying to you and saying vaccines are good for you, or the oil. Essentially, there's just so much corruption that is going to be getting rid of. No other president in history has had the A-star team that Trump has right next to him. Elon Musk, Vivek Ramsey, J.D. Vance. I mean, you can't get better than that. Robert F. Kennedy. It's just an A-star team to lead the country. I wish there was more people like essentially Trump and the A-star team in other countries around the world, because everywhere needs to be fixed. George, good to see you as well. How you doing? How you been? Trump has got, yeah. What's your top AI coins, Miles? Here's the thing with AI coins. Please be aware with AI coins. The number one AI projects, genuinely, the number one AI projects are, look, there are good blockchain projects out there that are AI projects. But the ones that are getting seed money, the ones that are raising a lot of money, the AI projects that are raising a lot of seed money in their Series A rounds or Series B rounds or Series C rounds from venture capitalists, the ones that are raising quite a lot of money, none of them are blockchain companies, the AI companies. They're just AI companies, but here's the thing. They're not public companies. So once they do go public, you can be the first one through the door on those companies. They're going to become big. A lot of these AI companies that are startup companies that are getting funded. There was an AI company that recently got funded roughly about 150 million. There's another one that got essentially funding 500 million. There's a lot of AI startup companies that are getting funded millions and millions of dollars and not public companies. So once they do go public, or if you want to get involved in the round, if you want to get involved in their seed money roundings, you could do as well if you want to do as an option or financial advice. But the majority of AI companies that are doing quite well for themselves, they're all startup AI companies. None of them are really blockchain companies or a token. They're just AI companies that haven't went public yet. But in terms of AI and blockchain, I mean, you would have to look at their contracts. There's one particular project like Viot, but it hasn't done well for itself quite a bit, but that's only due to regulations and policies that were going around. But it has a partnership with IBM. So any sort of projects that you want to go towards, as I said, it could be AI, it could be financial projects, it could be gaming projects or Web3 projects, or whatever category you're looking into. Just make sure, you know, what they're trying to build is going to be here in 5 years' time, because that's the minimum projection any company looks towards to. Are they going to be here in 5 years' time, this particular AI project or any crypto project? Do they have any sort of contracts in place with major establishments like IBM, for example, or a bank or a massive financial institution? Or do they have any sort of, like, for example, licensings in place to be able to operate as an AI company? Because there are some AI regulations in place as well in different jurisdictions, and a lot more AI regulations are coming as well. Less more restrictive because now we have Trump, but there is a lot of AI regulations coming through as well. So whatever crypto project you're going towards, any category, financial category, AI category, Web3 category, gaming category, no matter what category it is, just simple thing. What is it trying to build? Is it going to be here in 5 years' time? Does it have any sort of contracts in place with major establishments inside the banks, inside institutions, and to be able to operate? And if it doesn't have essentially the partnerships in place, then it's just the company pretending to be something it's not. Now, because for me, most is financial products. Why Gary Gensler not kicked from his job yet? He has to be kicked essentially January 20th onwards. He can't be kicked now. Exactly. He's got the dream team. There's no other president that will ever have that. That's facts. Yeah. Big Pharma having crisis meetings now. They are packing. They are panicking. Yes, facts. Big pharmaceutical companies right now are panicking because of Trump's victory. And thank God for Trump's victory. Honestly, thank God for Trump's victory. Now, we're going to be talking about Coinbase, Bitcoin, and Solana. There's something going on there. So, Coinbase brings Bitcoin to Solana. Nearly 2 years ago, FTX's collapse blew a Bitcoin-sized hole in Solana's based decentralized finance that hadn't been truly filled in, and possibly until now. Bitcoin remains a benchmark asset for trading, lending, and borrowing on centralized crypto exchanges. It takes extra effort, to bring a crucial financial functionality to DeFi on other blockchains. Basically, someone must issue a token backed by and pegged to Bitcoin on chain. Apparently, Coinbase wants to peg Bitcoin to Solana to bring some DeFi capabilities to Bitcoin through Solana. Exchange giant Coinbase is trying to fill that role on Solana with CBDC, so with CBBTC. Launched essentially today, it lets traders swap in and out of Bitcoin-backed tokens by sending it between the exchanges and their Solana wallets. That ease of entry and exit has contributors at many Solana-based protocols, and hopeful that CBBTC can become a gold standard that ripples across the entire ecosystem. One high-ranking official in Solana land said that there's much more higher hopes that Coinbase's CBBTC will be a hit, and especially at a time when Bitcoin, the world's biggest cryptocurrency, is ripping through to new all-time highs in the wake of Donald Trump's elections. Solana's DeFi hasn't enjoyed a comparable, straightforward Bitcoin stand essentially since the mysterious demise of the last standard Bezos BTC that wrapped Bitcoin tokens and is widely believed to have been controlled by FTX, and it died with the fraudulent exchange back in November 2022. BTC's failure left the chain's entire DeFi ecosystem without a widely recognized standard for trading Bitcoin on Solana. This put disadvantage to Ethereum DeFi, which had long of its own solutions, including a new one from Coinbase itself that Solana protocols assessed via bridging. Coinbase's native issuance of CBBTC on Solana reduces the risk and the surface by half, said essentially the contributors to the popular Solana-based decentralized exchange, Radium. They said we could see a surge on BTC's liquidity on chain, and we could increase usage in many different DeFi protocols, said Tom. It's early, but it hopes that the robust liquidity for CBBTC could have got some sort of flywheels going forward. That's only if Coinbase succeeds in turning CBBTC into Solana's standard stand-in for Bitcoin Other companies have also filed in an effort. 21.co has less than $1.5 million worth of its 21 BTC circulating on Solana's DeFi space. Thresholds of TBTC hasn't done much better. By comparison, Coinbase has nearly $10 million worth of CBBTC ready to deploy into Solana's DeFi space. According to blockchain data, an additional $500,000 of CBBTC is already sloshing around trading pools on Mitoro and Okoro and in reverse on trading protocols. He said, I think, essentially, and hope it's going to be big, said Cameo, the co-founder, Marius. There is no reason for most BTC DeFi stuff to happen on Ethereum. Apparently, Coinbase wants to diversify into Solana. And they want to diversify away from Ethereum into Solana by bringing some Solana capabilities to the BTC chain, but not using ETH, instead using Solana. They said unlocking BTC, essentially, they said Coinbase hasn't historically participated in Solana's DeFi space. CBBTC, it is essentially its first token issued natively on Solana's blockchain. The exchange is much more involved in the Ethereum world, particularly via its own layer 2 network base. Unlocking BTC utility for our customers across an on-chain economy is at the heart of our decision to launch a CBBTC. Expanding support to Solana and potentially other chains give our customers more options and aligns with our overall strategy of bridging, essentially, and bringing billions of users on-chain, a company spokesperson said from Coinbase. And in September, essentially, Coinbase first rolled out a CBBTC on Base and Ethereum with the premise of supporting more chains later. But CBBTC traders moving Bitcoin to Base get a small leg up on those moving Bitcoin to Solana. Coinbase to Base Bitcoin transfers are free. Coinbase to Solana Bitcoin transfers cost 40 cents, which is still relatively cheap, but it's free to do on Base Network. But here's the thing. Bitcoin is lacking capabilities in the DeFi sector, and Solana could be a solution to fix that scenario. So it could be a solution to fix it if they wanted to. But it is something that they have started. So if you're somebody that's using Solana, loves the ecosystem, well, you're about to get another boost because Coinbase is going to be boosting Solana with connecting it to Bitcoin, adding Bitcoin capabilities, making it easier for people to go back and forward from Solana to Bitcoin. They did this with Ethereum, but they're expanding towards Solana because they see Solana with better potential rather than Ethereum, even though Base Network is built on Ethereum. Strange on that one, but positive for Solana holders. If you're big on Solana's ecosystem, that's amazing news because they're about to be boosting the ecosystem with Bitcoin. Now, moving away from essentially Coinbase, Bitcoin, and Solana to Detroit. Something amazing is happening in Detroit, which is something that's been happening relatively in other countries around the world. So, essentially, Switzerland was the first country to do this. There are cities in Switzerland, like Laguna, for example, where citizens can pay their bills using essentially crypto assets. And there's a Bitcoin city also in Switzerland as well, where people pay their taxes, their fees, their council bills to the government using cryptocurrencies. It's much more widely accepted as a legal tender. Well, Detroit is about to be following the footsteps of Switzerland, where Detroit to accept crypto payments for taxes and city fees. This is something that would have never, ever happened if OnlyFans Kamala Harris won. But because Donald Trump won, you can already see the market and the country turning towards pro-crypto. Detroit would have never released this news under a Biden administration or Kamala administration. That is why they're releasing it. Detroit to accept crypto payments for taxes and city fees. Detroit is set to become the largest US city to accept cryptocurrencies for tax and fee payments. Starting mid-2025, residents can use crypto to make payments through a platform managed by PayPal, Detroit officials announced today. This initiative aligns with the city's plans to adapt new technologies to improve public services and promote economic growth. Michigan has been taking a pro-crypto turn recently, with the state of Michigan's retirement system investing $6.6 million in ARK21 shares, ARKB spot Bitcoin ETF. According to the officials, Detroit wants to create a more tech-friendly environment for both residents and blockchain entrepreneurs interested in contributing to the solutions. Detroit is building a technology-friendly environment that empowers residents and entrepreneurs, said essentially the mayor, Mike. He said, we're excited to allow residents to use cryptocurrencies as a payment option. Detroit's treasurer, Nikhil Patel, said that this crypto payment option is a part of the ongoing efforts to modernize the city's payment systems. The Treasury's office hopes the platform will upgrade and will make payments more accessible, especially for those without traditional banking systems. This new payment platform will increase accessibility for Detroiters who would like to use cryptocurrencies. More importantly, the platform will upgrade and will also make it easier for Detroiters to make electronic payments, including those who may be unbanked. This is something that's happening in Dubai, okay? Regarding cryptocurrencies being used as a legal tender purposes, something that happens in Dubai, in Switzerland, so on, Singapore, it's now happening in Detroit. It's happening inside the United States. And Trump hasn't even taken his seat yet. The country is already turning pro-crypto, using cryptocurrencies to pay off bills. Patel also said, essentially, alongside this rollout, Detroit is essentially inviting blockchain inventors to pitch ideas for blockchain applications that could enhance the city's services. Again, this would have never happened under the Biden administration and Kamala Harris, but it's happening under Trump, where they're actually saying, welcome to the blockchain entrepreneurs and tell us about your projects. Let's start investing blockchain projects. Let's start accepting cryptocurrencies as payments. The proposal should address potential benefits for city residents, including transparency and data security. With this move, Detroit joins states like Colorado, Utah, and Louisiana in essentially getting ready for accepting payments for cryptocurrencies. Absolutely amazing. Now, what we're going to talk about, moving away from the Detroit news, which is incredible that Detroit, or essentially anywhere in America, is already turning pro-crypto. And, you know, we still haven't reached January 20th. And we're already getting essentially states and cities inside the United States going, we're going to become pro-crypto. Amazing news. It genuinely is something that you hear in Dubai accepting cryptocurrencies, legal tender, and so on. It's just news that you hear from that side of the world, but now it's happening in this side of the world. Yeah, I don't know why it keeps on going dark. Before we go through the next news, let's go inside the comment section first. Let's go inside the comment section first, and then we go straight into the first news. Let's go inside the comment section. Do you think XRP is going to pop soon? It's a possibility, a high possibility. Here's the thing. Gary Gensler gets fired. Most cases will get, Ripple case will get dropped. So Gary Gensler gets fired, gets replaced, and the Ripple case will get dropped. The 3 XRP ETFs will get looked into and will get accepted. And then we're going to get more XRP ETFs coming in, which means institutions will tend to essentially buy, or Wall Street will tend to buy from ETFs rather than the asset itself. So 1, Gary Gensler will be fired. He'll be replaced. 2, policies, regulations. 3, the XRP ETFs and more XRP ETFs. In other words, yes. When XRP hits $10, consider variable change. Tau, Render, Near, Top AIs. They're good projects as well. Tau is a very good project. Near is also a very good project, amazing project, especially in the Asian market space. You know, genuinely good project. Facts, Dream Team, let's go, Ray. Good house and Crypto Family, nice to be amongst you again. Let's go, William. How you doing? I'm curious, since Kraken Kamala is basically in charge, will she do any damage to the crypto world out of spite before she's gone? I don't think she will, but if she does, I mean, you know, what could you expect from her? Twice now you've gone dark for a second or 2 miles. It's been weird. I don't know honestly why I'm giving it goes dark for a second, it comes back. Evening, brother Miles and CMF Bill, good to see you. How you doing? How you been? And XRP news, yes, towards the end of the live. Towards the end of the live, we'll discuss, and throughout we'll discuss about Ripple. Glenda, good to see you. How you doing? How you been? 3rd time now, Miles. Yep, 3rd time. Going dark, Miles. Yeah, it's weird. It goes dark for like a few seconds and comes back. Miles, what's happening to your connection today? I have no idea. I need to have a conversation with Virgin Media. Miles, when XRP starts its run, are you going to go live like you did for the election? I had so much fun hanging out with the CMF family. Yes, I will. When it's not a bad idea. It's not a bad idea. When XRP starts going for a run, and will I do a very long live? Yes, I will. Why not? We can all spend time together on the CMF live. Once Gary Gensler gets fired, we'll we'll do a long live when Gary Gensler gets fired. Markets start moving. XRP starts moving. XRP ETFs get approved. We'll do a longer live as well. Why not? It looks like Gary is coming after you tonight by the looks of it. But yeah, Stormy, sure. It'll be great. It's a great idea, Stormy. I enjoyed the last time as well. I enjoyed it when we did an 8.5-hour live for the Trump presidency. Amazing. The end result was absolutely amazing. Trump presidency. Let's go. Now, billionaires is what we're going to talk about next. You see, a lot of people have said that essentially Trump is going to be helping out billionaires. Trump is going to be helping out companies and corporates. And how is that positive for the little guy? Is what the what's happening? Why does it go like that and it comes back? What? As I was saying, before that happened, I will do another all-nighter with XRP moves. Let's go. So, as I was saying, the news kept on essentially bashing on the idea that Trump is going to be cutting taxes for billionaires. He's going to be cutting taxes for corporations. He's going to be helping corporates or helping out billionaires. And it's not going to be helping out the little person. The news was lying to everybody. It is going to be helping out the little person. You see, when corporates get heavy taxes, when companies get heavy taxes in place, what they tend to do is fire people. Genuinely. When corporations get heavy taxes upon them, they tend to fire people so they can make their money back. But when you give tax breaks to corporates, they tend to essentially give bonuses out, hire more people because they have money circulating, money that isn't being sent to the government and wasted. So when the news was telling you Trump's going to be cutting taxes for billionaires and corporates, and how's that going to help the little guy? Companies should be paying a massive tax. That's going to help the little guy. No, because when companies pay high taxes, it goes straight into the government's wallet. And what do you think happens next? Does the government wallet open its doors to the regular folks? Hell no. The government's wallet opens its doors to Zelensky in Ukraine. But when corporates don't pay heavy taxes and get tax breaks, what tends to happen is they hire more people. They start handing out bonuses. And that's how it operates as a company. But when corporations have to pay heavy taxes, they tend to fire people to make up money back. They tend to cut bonuses to make up money back. And that money ends up going to the government, that heavy tax, which goes straight into random, essentially, prospects. So that is why cutting, essentially, corporate tax is actually a good scenario. But the news will never tell you that. CNBC will never tell you that Trump is actually doing a good thing. They will lie to you. They will come on live news and say, Trump's going to help the billionaires out. How's that going to help the 9-to-5 little guy? It actually helps him a lot. So why don't you tell him the other side of the story? The news will only tell you half the story, but they'll never tell you the reality part of the story. They'll tell you the delusional part of the story, but not the truth part of the story. So, billionaires and wealth soars as Trump's victory sparks market rallies and crypto surges. The fortunes of some of the world's wealthiest individuals surged following Donald Trump's presidential election victory, with high hopes for policies that could benefit corporations and the cryptocurrency sector. Several billionaires saw remarkable increases in their net worths. Billionaire entrepreneur and Tesla CEO Elon Musk's net worth skyrocketed by $20 billion following Donald Trump's victory in the US in the presidential elections. Forbes reported that Elon Musk, one of Trump's biggest financial backers, saw its essential net worth rise by almost 8% in one day to $285.6 billion. The stock price of Tesla, which the billionaire CEO holds, 13% has risen by double digits percentages since the start of Wednesday's trading times. Musk wasted no time celebrating Trump's apparent victory. Even before the election results were officially announced in the former president's favor, the CEO of SpaceX wrote on his social media sites that Trump had been guaranteed a crystal clear mandate for change. In a separate post, after the US Department of Justice abandoned its proceedings against Donald Trump, accusing him of fraud and conspiring to reverse the 2020 elections fraudulently. Elon Musk said, "The people of America have spoken and spoken with absolute clarity." Elon Musk has rallied with Trump in Pennsylvania and had a lot of riding on his elections, having spent essentially $190 million to the super PAC by backing the former president, according to the New York Times, which is, the number's a bit vague. Jeff Bezos, the world's second wealthiest person after Elon Musk, saw his net worths increase by $7 billion to $223.5 billion after the high of $207 billion by the end of tradings on November 6th. Larry Ellison, the co-founder of Coral, also saw his wealth rise significantly, with his net worth growing by almost $12 billion to $220.8 billion. Warren Buffett, the legendary investor and CEO of Berkshire Hathaway, also gained $7.6 billion, bringing his total fortune to $147.4 billion as Berkshire Hathaway shares climbed over 5%. Coinbase's CEO Brian Armstrong also had a fantastic day with $2.6 billion boost, raising his net worth with roughly $11 billion after the company's shares rose by 31%. MicroStrategy inventor and Bitcoiner Michael Saylor estimated net worth increased by over $600 million to $6.6 billion after the company shares also rose by 13%, matching his monthly high of $258. Robinhood's co-founders Vlad and BJ also each saw then nearly $300 million added to their fortunes as Robinhood shares rallied 20%. The world's leading crypto Bitcoin rose by more than 7% all-time highs of $76,400 shortly after Trump's won in the White House race. All these are good things, genuinely good things. Because if we did get heavy taxes on billionaires and heavy taxes on corporations, then they would stop firing people. Genuinely, they will stop firing people and bonuses will be cut. When companies don't get heavy taxes, when companies don't have to pay heavy taxes, they keep people's bonuses alive. They start hiring more people because they're not giving chunks of money in bags to the United States government or to any government. They're keeping that money for themselves, which means it circulates inside the company, which means they can hire more staff, which means they can start handing out more bonuses. That is what happens when you start giving tax break cuts to corporate sectors. But when you start putting heavy restrictions and tax restrictions on corporates, they generally start firing people. People start losing their jobs. People start not getting their bonuses and so on. And there's so many, awful scenarios that can happen. But CNBC will never tell you that. The news will never tell you that. News will say, oh, Trump's doing, Trump is giving the billionaires a rate cut. Trump is trying to help the billionaires grow. He doesn't care about the little guy. Wrong. He actually cares about the little guy. But Trump is looking at it from a perspective, from a corporate perspective. You give them a tax break, they will help people in return. You get hard and stiff on corporates, they will get hard and stiff on their own workers. So that is how it works when you give corporations tax breaks. They don't waste their money on government budgets that Zelensky gets to use from Ukraine. Kamala Harris not once said the truth. In her entire campaign, Kamala Harris not even once said the truth about Trump. But to be fair, Kamala Harris probably has 3 brain cells, which is 1 more brain cell than Sleepy Joe. Now you know how things work inside the corporate sector with tax breaks. Tax breaks for the corporate sector are good. Means you get to keep your jobs. It means people get to keep their jobs. It means more people get hired. It means more people get bonuses. That's what tax breaks do inside the corporate sector. It's not the opposite. Now, here's one example. Because the money just keeps on circulating inside the company instead of going to a government wallet, which essentially gets spent in Ukraine. How's that a benefit for anyone? Everything the media tells is lie. Every single thing the media tells is a complete lie. Now, here's one example. This man that I'm about to tell you right now, this man hated Trump, okay? This man hated Trump. I'm going to tell you now, but now he loves Trump. This is a CEO of $1 billion crypto firm who, hate might be a strong word, but he didn't like Trump. And he supported Kamala Harris. But then Trump's victory raised his company into the skies, and now he's all of a sudden saying, you know what, it's not a bad idea, Trump presidency. Galaxy Digital, Mike Novoscott, was against Trump, and he kept on saying Kamala is pro-crypto, Kamala is going to bring out crypto regulations, and I was the one keep on reporting the news on this live saying, where is Kamala Harris pro-crypto? She was the one that vetoed Congress in favor of Gary Gensler on crypto policies for banks. Galaxy Digital clocks the biggest trading day of the year on US election days. The reports have came now. Galaxy Digital, a cryptocurrency trading firm, clocked the biggest trading day of the year as Donald Trump's victory inside the United States presidential race sparked a surge in interest in crypto. Bloomberg reported on this matter. Our franchises was operating at full bore, trading with counterparties both in the US and on board, lending the directive desk. Mike Novoscott said, essentially, the Galaxy CEO to Bloomberg, as an interview he did. He said, it really felt like a formation of everything we've been working for. Mike Novoscott's net worth surged by about 15% or by around $600 million. This man made roughly about $600 million with Trump's presidency, and he was against Trump. He was for Kamala Harris. Nobody knows why. The issue is when billionaires are in favor of Kamala Harris, it doesn't make sense that they're getting paid off in any sort of a way, because you can't pay off a billionaire. But if a billionaire is backing the wrong person on purpose, it means it's blackmail. It's not paying off the person, it's blackmail. Because if you're somebody that has $1,000 in their bank accounts and, you know, Kamala Harris's campaign is paying you $10,000, some people will sell their source for $10,000. But if you're a billionaire and you're backing Kamala Harris, it just means they have something on you, because you're not getting paid off to choose the wrong party on purpose. It means it's blackmail. But nevertheless, this man who was against Trump, his company and him, they made $600 million in one day. The crypto market, he told, essentially accounting to Bloomberg's Billionaires Index. Now he's on the Bloomberg's Billionaire Index. The crypto market surged following Trump's victory inside the United States presidential elections, as many believe his win will have a significant impact on the industries, said Cointelegraph's research as well. Bitcoins rose to a peak of $76,500 on the day after the elections, as traders rode essentially a wave of optimism on towards the market space. And Bloomberg ETF analyst Eric said that iShares Bitcoin Trust, IBIT, saw its biggest volume day ever on the same day with $4.1 billion in daily trading volume. Meanwhile, Ether price spiked 10%, and US spot Ether, essentially exchange traded funds, saw a net inflows of $52.3 million, of the highest in 6 weeks. US crypto stocks also saw massive gains, with most double digits after Trump swooping to win. Bitcoin's nearly 8 months of reaccumulation after March's all-time highs. Many feel the raging bull run is on the verge right now. And once again, the rules of the weekly candle rose above $71,500, and it would kickstart the breakout of the reaccumulation range, said Rect Capital, essentially. And here is what Mike Novoscott said, this ungrateful bastard, let's just say. Mike Novoscott. He said, I didn't publicly support Donald Trump. Yeah, because you publicly supported Kamala Harris. And he said, I didn't publicly support Donald Trump as a president, Mike Novoscott reportedly told Bloomberg. But he also said, I was actually on the other side. But I was always a pro-crypto, and I thought, let's do the best we can to have an agreement. I'm sorry, if you're pro-crypto, why choose a candidate that's anti-crypto? But this ungrateful bastard made $600 million because the corporate sector is getting a tax break. But that's what happens when you give corporates tax breaks, essentially. More people get hired, money starts circulating more inside the companies, people get essentially bonuses and so on. And that is why Wall Street, not only is everybody around the world who has brain cells, genuinely, not only is everybody around the world who has brain cells very, very grateful of a Trump presidency, but also the corporate section of Wall Street have brain cells. And that's why they're also very grateful for essentially a Trump presidency. Now, before we go, but now you know how tax breaks cut. So next time you hear on CNBC, because I know for a fact, CNBC is not going to be changing their opinions on the ongoing 4 years. CNBC is still going to be lying, spewing lies 24/7, as much chance as they get to essentially degrade Donald Trump's integrity. They're going to be doing this on purpose. And CNBC isn't the only one. But now you know, you can at least one of their BSs when they say, "Oh, Trump is helping the billionaires." I don't know how that's good for the regular folks and 9-to-5 folks. But now you know the real story. Tax cuts on corporations is a beneficial thing for the essentially regular folks, for the 9-to-5 people, because if they get a break, you get a break. Genuinely, the simplest way to put it. If corporates get a break, then that means the regular folks get a break as well, because the money circulates within the company and not in the government wallet that gets sent to Ukraine. Now, what we're going to talk about next is Gary Gensler, another bastard. But before we go through that one, let's go inside the comment section first. Let's see what's going on here. By the way, this is a live, which means if you do have any questions, go through inside the comment sections. I read everybody's comments one by one. So if you do have any questions, go through inside the comment section. I'll be more than happy to give you an answer. I read everybody's comments one by one, give short, simple answers to get through everyone. So I don't leave anybody out. Everybody's tuning into this live, so I want to pay respects to everybody and read out their comments and give a response. Let's see where we were at. We were at here, and then we'll go straight into the next news where we talk about Gary Gensler. I will do another all-nighter of an extra news. Love the long lives. That Trump one was going down in history, though. Dang, bro, they keep trying to cut you out. Yeah, I know, it's weird. Hi, Miles, the CMF family. Good to see you guys. Time to turn on my CMF TV for a short time. Let's go, Carl. How you doing? Very true. To get the economy going, the corporations must be given tax breaks, and the money is used to hire people. Facts. How has your day been, Miles, and CMF? It's been great, Lena. How you doing? How you been? How's your day? William said, true again. They put that money to work to make more money. Facts. Elon Musk is a genuine. He invested $119 million with Trump's administration. He made $15 billion the day Trump won. What a genius businessman. Hats off to Elon Musk. Facts. Trump has already allocated $2 trillion to Elon Musk for renewable energy from his $7 trillion budget. Amazing. Exactly, Miles. Teach. Let's go, Stormy. That's a sign of a typical hypocrite's. Last message was for Nick. No problem. Now, Gary Gensler. So here is how Gary Gensler could lose his SEC chair gig under Trump. With the crypto-friendly Donald Trump being elected president, industry leaders are now awaiting for his biggest move, which could be appointing a new chairman of the U.S. Securities Exchange Commission. U.S. President-elected Donald Trump, many endorsements from crypto leaders. The Winklevoss twin brothers, Mark Anderson, Ray, and it just goes, the amount of blockchain essentially CEOs, there's quite a lot of them that have been endorsing Donald Trump, just to name a few, were the result of a real estate Mongols' many promises to support the expansions and continued developments of digital assets in industries inside the United States. Arguably, one of the most crucial premises Trump made to pull the crypto community onto his side was this: one day I will fire Gary Gensler. And the entire crypto community was sold, which I fully understand. While he can't force Gary Gensler to step down as commissioner of the SEC, U.S. Securities Exchange Commission, he can name a new SEC chair as soon as he's integrated on January 20th. He can also nominate a new commissioner to the Senate, which has to confirm the pick. Given Republicans have retaken control of the Senate after flipping several seats during Tuesday's presidential elections, Trump's pick would have a good choice of making it through the votes, and a new chairman could take office within a few months. Gary Gensler, for example, was nominated by current President Joe Biden on February 1st, 2021, confirmed by the Senate on April 14th, and sworn into office by April 17th. Gensler has made many enemies inside the crypto sector due to his essentially stance that the agency has sufficient rules and regulations for the industry already. A status quo crypto leaders disagree with him. And one of the most fundamental differences is Gensler's instances of one he shared with his presidencies that Trump appointed Jay Clinton. That most cryptocurrency transactions on centralized exchanges violate federal security laws. They don't. Excluding this year's launch of spot Bitcoin and Ether, essentially exchange-traded funds, ETFs, which were approved by the current SEC after years of conversations and legal, essentially, victories by asset manager Grayscale, the financial regulator hasn't done much to help steer the crypto companies in the right direction of what is legal and illegal, as it has yet to be determined whether all cryptos are securities or not, which they're not. Gensler has been essentially on the forefront of those actions, being openly skeptical of cryptocurrencies. Just last month, he retreated his views, and they haven't changed whatsoever. Speaking at the NYU School of Law in Manhattan in October, he said, "With all respect, the leading lights of this field in 2024 are either in jail or awaiting extradition right now." Knowing Trump's plan for him, Gary Gensler could also choose to resign before the new president takes office in January. It is true, Gary Gensler can choose to resign if he wants to. If there were to happen, a chair would be appointed by President Joe Biden from the remaining Democratic commissioners until Trump is essentially in office, before Trump names his own essentially commissioner. Whoever Trump nominates will probably replace Commissioner Caroline Crenshaw as well, who is currently up for renomination. If Gensler resigns from his commission entirely, he will also need to be replaced through the nomination and confirmation process. A number of cryptocurrencies that the SEC named as unregistered securities have seen their prices rise over the past day or so, which is true, including Filecoin. According to Gary Gensler, Filecoin is a security, Algorand is a security, Polygon is a security, Matic is a security, Near is a security, Solana is a security, possibly anticipation of more essentially crypto projects being considered securities by Gary Gensler as well. But here's the thing, Gary Gensler can be fired. Gary Gensler can resign if he wants to. But knowing how stubborn Gary Gensler is, very unlikely he's going to resign himself. I mean, if he had any sort of integrity, he would resign, or at least bring something pro-crypto before he gets kicked out of office. But I don't think he's going to resign, possibly. If he did, happy days. Gary Gensler resigns, everybody's happy about it. But knowing that man, he is an incredible weasel. And weasels don't resign. They get stomped on like cockroaches. Now, moving away essentially from Gary Gensler possibly resigning, if it's he can do if he wants to Telegram news. Telegram is going to become an everything app. I've discussed this matter throughout this year, that X is not the only one aiming for an everything app. Telegram is also aiming for an everything app as well. And we're going to go through that right now regarding a CEO perspective of Telegram. Now, Telegram obviously has had its difficulties with its founder being comprehended in France, which that scenario is going to completely go away because Trump is in power now and the world's turning pro-crypto. So they're trying to stifle Ton's growth. It's not going to work anymore. Ton was climbing the ladders. Inside of, if you ever saw CMC, the day Ton launched until now, Ton was climbing the ladders. Ton could have overtaken Solana easily, but they stifled it. The moment Ton got to number 10, number 9 is when they start stifling it. That's exactly when essentially the CEO of Telegram was arrested in France and then let on bail. But Ton still has a massive future, an incredible future. But the biggest advantage I've always said that Ton has over its competitors inside the blockchain space is a user base. You see, most crypto projects have to grow their ecosystem by attracting users, which takes a lot of time and a lot of money if you're advertising to get users in. Telegram already has the users, and Ton is a project built by Telegram, which the SEC decided to sue Telegram for when Telegram dropped the Ton crypto project, and then a few developers picked up Ton's ecosystem and made it an open network and then partnered with Telegram for a loophole so they don't get sued anymore. And Telegram already has roughly 1 billion users. There are crypto projects that would dream of having 1 billion users. And Telegram already has that. That is the biggest advantage Ton essentially has against its competitors inside the crypto space. Genuinely biggest advantage. And everybody will eventually use Ton's ecosystem on Telegram. If you use Telegram, eventually you are going to be a part of Ton's ecosystem. So there's 1 billion users ready for Ton's ecosystem. That's the biggest advantage you can have. Now, here's a perspective from BitGet's CEO looking into Telegram and saying, wow, they have a massive edge over everybody else. Telegram is becoming a one-stop app like China's WeChat. In China's WeChat app, you can pretty much do anything. You know, in the West, we have an Uber app for getting essentially taxi rides. We have a food app like Uber Eats, or we have a food app like Just Eat, and so on. In the West, we have multiple applications for different things. In China, they have WeChat, which is pretty much all the apps we use separately into one app, which is what Telegram's becoming. And they have 1 billion users and 1 crypto project, Ton. Telegram and the separate decentralized open network have the potential to elevate the messaging platform into an all-encompassing application that includes social media, payments, finance, entertainment, gaming, and communication capabilities, much like China's popular app WeChat, which is what X is also going to become. Now, for X, we don't know what crypto project X is going to choose still. We don't know what project Elon Musk is going to choose, but we know X is going to become an everything app as well, which is amazing, genuinely amazing. But we don't know what crypto project he's going to choose. Some people are estimating it's Dogecoin. Some people are estimating, essentially guessing it's going to be Bitcoin. Some people are guessing it's going to be XRP. And some people are guessing it could be a multitude of cryptocurrencies. But here's the thing. With Telegram, we don't guess. We know it's Ton. They built it. And it's the only partner they have, and the only partner they'll ever have. According to Gracie Chen, the CEO of the exchange of BitGet and the wallet provider BitGet, Telegram's essentially relationship with independent open network and its crypto trading features distinguishes the application from its competitors and is positioned for a massive growth. It has a very big edge. And this is a perspective also coming from the CEO of Cointelegraph. A lot of CEOs randomly today have came out and said, you know what? Telegram has 1 billion users and they have 1 project that they built, which is Ton. 1 billion users, Ton. That's a massive edge over everything, over any crypto project in the market space right now. He said, I think the crypto adoption is definitely something that makes Telegram stand out among other social medias. And that's indeed one of the reasons we want to be closer to the open network ecosystem. The BitGet CEO also cited the metric adoptions of Telegram in emerging market economies, particularly among young people also in Africa, as further evidence of applications potentially to become an everything app used by billions of individuals. Chen explained that Nigeria and Egypt are boosting the most significant Telegram adoption among African countries. The CEO revealed that in Nigeria, approximately 54% of individual adults aged between 16 years old and 64 years old were Telegram users. Egypt followed closely behind Nigeria, 53%, according to Chen. And Chen told Cointelegraph that Telegram's high adoption rate in African countries was at least partially driven by Telegram's tap-to-earn games, mini games, which became a focal point of Telegram's ecosystem. However, the CEO argued, I don't think that's sustainable. It's more of a short-term effect regarding the mini games, and told Cointelegraph that WeChat took a similar approach during its early days to attract and onboard users, which is true. WeChat was offering the same features in its beginning days, in its early days, as what Telegram is doing right now. Telegram and X, and even Elon Musk. Elon Musk has even himself said that X is going to become a WeChat app. Elon Musk has used those words, where X is going to become like a WeChat app. Telegram is following the footsteps, the blueprint that WeChat left behind. By offering mini games and mini-to-earn games on the crypto blockchain space to get people in quicker into Telegram app. And then they're intertwined with Ton's ecosystem. The BitGet CEO's exhortation essentially is by the sharp decline of the crypto projects that they have created, the popular Telegram tap-to-earn games of its of its player bases after the game's popularities, and the crypto trading firms and liquidity providers GSO also released reports of highlighting the open network's potential to drive mainstream adoption of crypto and decentralized finance. Researchers of GSO likewise argued that the interplay between the open network and Telegram's messaging app provides a compelling avenue to onboard the general population to a digital asset ecosystem. There's a lot of things that Telegram can do a lot of people are not aware of. For example, if you are sitting in a restaurant and you want to see the menu of that restaurant, Telegram offers a feature. It's not available in every country, but it is going to become available eventually in every country. Telegram has a feature where if you're sitting in a restaurant and you want to see the menu of that restaurant, you can open up your Telegram app and it'll show where your location is. And then you can click on the restaurant you're sitting in. You can see the menu of the restaurant in your Telegram app and order your food from your Telegram app while sitting in the restaurant using crypto. In some countries, you can use a Telegram app like Uber. Telegram is becoming everything app, and the backbone is the TON ecosystem. 1 billion users. Solana doesn't have 1 billion. No crypto project pretty much has 1 billion retail section users. 1 billion retail section users. No crypto project has that. But TON does. Eventually, it will. Built by Telegram. Now, and the moment it started climbing, the ladders, the moment TON started climbing the ladders, going higher and higher, and it got to number 10 out of 24,000 crypto projects. It got to number 10, 9, and then the founder of Telegram gets arrested. Coincidence or coordinated to bring him down? But anyways, Trump now is the president of the United States, and Trump's going to handle that situation most likely. He is, pro-crypto. This guy is a crypto billionaire and so on. So let's see how that scenario goes down. But I do believe that a Trump presidency is actually going to help, essentially Telegram as well, the Telegram founder, in his situation on France. Now, that TON's ecosystem is going to grow eventually with 1 billion users. Incredible. Now, moving away from the TON ecosystem to US SEC. Gary Gensler is what we're going to talk about next. But before we talk about Gary Gensler, let's go inside the comment section first. As I said, this is a live, which means if you do have any questions, put them down inside the comment section. I'll be more than happy to answer any questions you may have. Let's see what's going on inside the comment section right now. Here we go. This means that Gary is getting paid, but is not a part of the SEC. Yeah, basically. Biden just asked Donald Trump to go to lunch with him, and Trump accepted. Guess who's scared? I do believe that Biden voted for Trump. Even Biden didn't want Kamala Harris winning. Biden has 2 brain cells left. At least in the last few days, he used those 2 brain cells left to make the right decision by supporting Trump. I don't like to disagree with you on your own show, but trickle-down economies don't really work. They used to that money to buy back stocks. They sometimes use that money to buy. Also, when a company uses that money to buy their stocks, the company's valuation goes higher. And some companies also hand out stocks as well. Any ACH news? Not so much, no. Restaurants here, when you're downloading the app, setting on the table, you order through the app, you'll never see the waitress. How will TON earn its money from the restaurant's menu? I'm a fan, I hold. Well, essentially, it's a transactions basis. So essentially, it's being used. Their aim is to make TON usable as a legal tender. More transactions, more activity happening on the network usage, the valuation of TON will go up. It'll have indirect effect on the token price itself. Elon Musk gave use to TON network too, just like Telegram. I think Kamala voted for Trump. Probably. I mean, Biden just wants to be the only one that had beaten Trump. Biden's wife was wearing red yesterday. What is the story about AVAX's buyback? So AVAX, Avalanche, is buying back and they're moving away from the Terra Luna ecosystem. So Avalanche spent $53 million to buy back essentially their own tokens from Terra Luna because they want to distance themselves from Terra Luna. But I genuinely believe that Biden used his last 2 brain cells that he uses to stand up properly and mumble some words here and there to vote for Trump. I don't think he voted for Kamala because the way they threw out Donald Trump, I mean, the way they threw out and Sleepy Joe, I don't think he was voting for Kamala. Hopefully we won't hear from Mike and Barack. Yeah, hopefully we won't hear from them. Biden just wants to, yeah. Biden's wife was wearing red yesterday as well. What is the story about AVAX buying back? That's the story about AVAX buying back. Hopefully we won't hear from Mike and Barack. Yeah, Obama has disappeared. Obama and his wife apparently did a David Blaine type of situation. They just disappeared like a magician. Because Trump knows that everything that was thrown against Trump came from Obama. Every single thing that happened to Trump was from Obama's side. Sleepy Joe, as I said, 2 brain cells. That man is not capable of running a scheme or a show going against Trump. Okay, Sleepy Joe does not have the brain cells to go up against Trump. Kamala Harris, do you know what Kamala Harris reminds me of? Have you ever seen that episode in The Simpsons when you were young, and then it shows Homer Simpson, and then there's a monkey in his brain going like this? Essentially, it's just and Sleepy Joe as well. There's nobody there. So Kamala Harris is not that intelligent to pull that off. Neither is Sleepy Joe with 2 brain cells and that monkey in his head, and Sleepy Joe's head just going like this. Obama is the only one that has the brains to, orchestrate a plan to go up against Trump. So the reason why, I'm guessing why Obama has disappeared is because he knows when Trump gets into that seat on the 20th, he's going to be going after Obama in some sort of a way. Or whoever he goes after for coming after him is going to lead to Obama somehow. Because Sleepy Joe is not that intelligent to pull off this, to go after Trump. Or Kamala Harris is not intelligent to go after Trump. The way they did. Obama does. Obama is intelligent enough, manipulative enough, and corrupt enough to go after Trump. That is the reasons why they disappeared. Because they know they're going to be looked into 100%. That's why he said he wasn't going to be attending her post-election party. He definitely voted for Trump. Apart from the fact that it was the past his bedtime. Yep, pretty much past his bedtime. In your opinion, will there be an alt season in 2025? Hell yes. Hell yes. The world is going to be so pro-crypto, it's going to be unreal. We're going to have regulations, policies, a new chairman of the SEC. It's just going to be pro-crypto everywhere. Wall Street is pro-crypto already. Detroit, out of nowhere, decided to do, crypto as legal tender in 2025. So, hell yes. It's no longer just going to be a Bitcoin run. It's going to be an alt run as well. Now, SEC. U.S. Securities Exchange Commission goes after Kraken crypto exchange. Obama reminds me of Gus from Breaking Bad. I know that Simpsons episode, that monkey instead of the brain though. Yeah, honestly, every time I look at Joe Biden, every time I look at Sleepy Joe, it reminds me of that episode of Simpsons with the monkey in Homer Simpson's head. Just, it just reminds me of Joe Biden every time I look at him. So we're going to talk about the SEC now. The US SEC goes after Kraken crypto exchange in legal case over crypto regulations. It seems like Gary Gensler is not backing down, and instead he's decided to go after Kraken. But the reasoning why they're going after Kraken is comedy. Because Kraken is claiming that the reason why they're suing the SEC, interesting enough, Kraken is suing the SEC because the SEC has not brought out any regulations, is what Kraken is saying. The SEC filed against Kraken today and said that essentially, in the most simplest way, Kraken is throwing allegations against the SEC that we haven't brought out any regulations and that, essentially we're going after Kraken and that they are selling securities and so on. And they're not allegations. It's true. I don't know if Gary Gensler is delusional or he genuinely is just The US SEC, under leadership of its chairman, and they try to dismiss this case. The US SEC, under leadership of its chairman, Gary Gensler, has filed a motion of judgment against Kraken Exchange, a popular crypto exchange, today. The motion seeks judgment on the ongoing case between the Kraken Exchange and the financial watchdogs, focusing on Kraken's key defenses, including fair notice and the major questions. The US SEC motion aims to hinder and limit further discovery into the Commission's regulatory policy surrounding the cryptocurrency industry. And by the way, Kraken is not the only one right now suing the SEC, a countersuing situation, for not doing absolutely nothing. Also suing the SEC for doing nothing as well. The US SEC's motion aims to hinder and limit further discovery into the Commission's regulatory policies surrounding the cryptocurrency industry. The motion has sparked a wave of controversies among the crypto community, as members claim the regulator is attempting to shield the agency's regulatory enforcements from investigations. Kraken's lawyers, Michael O'Connor, brought the issue to light through an ex-post dated today. The lawyer claimed that the regulator was attempting to shield its inconsistent defensive policies and how they have negatively impacted the US economy. The lawyer also, from Kraken, referenced how the SEC has failed in his case against Ripple. Kraken said that essentially how the SEC has failed also against Ripple. And Michael O'Connor, the lawyer of essentially Kraken, highlighted that what happened in the legal case between Ripple and the SEC could be replicated in cases against the exchange. According to O'Connor, the case timing is not coincidental. The lawyer mentioned that Gensler's days in office are numbered, despite his attempts to double down on failed policies against the American people. Gary Gensler's approach to crypto regulations has sparked an outcry from the crypto communities. The chair was summoned on September 24th. The chair was summoned and grilled by the House of Financial Services Committee. The committee chair, Patrick McHenry, Republican members of Congress questioned Gary Gensler and other US SEC members on how he has regulated the crypto industries. Trump's promise to fire Gary Gensler on day one in office. Gary Gensler's policies have been so controversial that his name appeared on Donald Trump's campaigns while speaking to essentially to the crypto communities in the Bitcoin conference in 2024 in July. In his signature no-nonsense speech, Trump promised the crypto communities that he would remove Gary Gensler from office. This is what all the lawyer from Kraken is saying right now. That essentially he would remove Gary Gensler from office on his first day in office and appoint a new US SEC chairman. Trump also promised to consult crypto experts to develop a better crypto policy. Ripple's CEO, Brad, has even been a long-term critic of the US SEC and Gensler's policies concerning digital asset regulations. As a part of his note to Donald Trump's victory, Brad proposed a crypto checklist for the president-elect's first 100 days in office, and the first in the line was firing Gary Gensler on day one. Trump's promise has birthed a speculation on who is likely to replace Gary Gensler. Once he's fired, crypto attorney Jake essentially shared his insights that Mark, the SEC commissioner, is likely the strongest candidate, but emphasized that Trump may prefer bringing someone new. The lawyer also stated that Trump will take office January 20th and bringing in a new set of leaders of federal agencies. He wrote that crypto policies will change immediately with his new leadership. So, is SEC going to be, is Gary Gensler going to be resigning, saving some dignity and integrity for himself by resigning? Hell no. Apparently, Gary Gensler has decided to double down on the crypto space while he still has time and a job. What a weasel. Or what a bastard. He could have chosen to choose the correct path and say, you know what? I've messed up all these years. My policies don't work because I don't have any. The frameworks that I've created don't work because I don't have any. I don't know why I've sued 100 different blockchain firms for no apparent reason. Haven't won a single genuine case. Also, one judge decided to fine the SEC for lying in essentially a court scene where the SEC lied about debit box to a judge by telling the judge that debit box is stealing people's money, sending it abroad, where the judge had to freeze debit box's bank accounts, and then later asked the SEC for evidence, and the SEC said, evidence? What's that? Which ended up the judge opening back the essentially bank accounts with debit books. Debit books countersuing the SEC. 2 lawyers from the SEC got fired. A department in the SEC got closed down, and the SEC was shamed once again inside the crypto space. After all of that, 100 lawsuits, ashamed inside of a federal judge, being accused for essentially doing nothing by Congress day in, day out, getting fired from essentially Donald Trump, Trump announcing he's going to get fired, everybody's cheering. After all of that, did this man decide to take the moral high ground? No, he decided to double down the crypto space by going after Kraken. And the best part is he's going after Kraken because Kraken apparently threw allegations against the SEC for doing nothing since the beginning of this year until now, and previous years inside the crypto space. And they're not allegations. It's just the truth that Gary Gensler does not want to accept, no matter what. Gary Gensler is the type of person that goes home and goes, yes, I've achieved a lot today. And he's achieved absolutely jack squat. He genuinely thinks when he leaves office, Gary Gensler genuinely thinks when he leaves his office, when he leaves his chairmanship of the SEC, he believes in himself that he's achieved a lot inside the crypto space when he is fired. And he's achieved nothing. He's just been paid to do nothing. And to stifle. Now, moving away from the incompetent and useless Gary Gensler to institutions is what we're going to talk about next. We're going to talk about institutions and real-world assets, and I'm going to be telling you the truth about real-world assets after I read you the statements. But before we go through that, let's go inside the comment section first. Let's see what's going on in there. If you do have any questions, this is a live, which means put questions down inside the comment section. I'll be more than happy to answer any questions you may have. One second. Sorry about that. It's charger. There we go. Yeah. Okay, let's go to the comment section first. Let's see what's going on in questions. And then we'll go straight to the next news with real world assets, institutions, and Donald Trump and so on moving forward. How's things going to look? How positive are they going to look? And I'm going to be telling you the real part of real world assets, which nobody tells you about. I've said it once or twice, but I thought, why not share it again, just in case we've got someone new watching and they want to know the truth about real world assets that nobody's telling you inside the crypto space except me. Now, Obama reminds me of Gospel Bring It Bad. I know that episode of Simpsons. Trump put a good statement up in X. Check it out after the live, everybody. Let's go. Obama is the first black president, true, but he is also the first president that gets 3 terms. Sleepy Joe was only the face. Facts. Absolutely facts. Gary Gensler, Mr. Burns, is the real piece of work, though. The nuts. Yeah, facts. Now, institutions. Institutions are betting big right now on real-world assets and are expecting large returns in the future. The tokenization of real-world assets. Right now, Wall Street is all over real-world assets, especially, having a pro-president for cryptocurrencies and blockchain innovation. Wall Street is, extremely pro-crypto right now. Pro-Web3, pro-AI, pro-blockchain, pro-real-world assets, even pro-wholesale CBDCs. So here's the thing. Institutions are betting big on real-world assets. The tokenization of real-world assets is emerging as a prominent trend in drawing substantial institutional interest and investments. This movement has fueled forecasts of explosive growth in the real-world asset sector, with estimates ranging from $4 trillion to $30 trillion by market size by 2030, which is a huge market space. As reported by Cointelegraph's research by Trend Finance suggests that real-world asset tokenization sectors could see a 50x growth by 2030. So I'm reading you a report right now from Cointelegraph on how they see the market space going forward for real-world assets with institutions in play. Major players like BlackRock and Boston Consulting Group are placing serious bets on this market, recognizing its potential to revolutionize how assets are traded, owned, and invested. Michael, the co-founder and managing partner of Web3 investments firm Neoclassic Capital, said big investors are drawn to real-world asset tokenizations because it addresses pricing inefficiencies in both traditional finance and crypto. Michael also told Cointelegraph a market will naturally tend to be pricing inefficiencies to tradify, that is, mispriced credit facilities, i.e., cost of capital, or exposures to underpriced volumes, the crypto natives, that is, the low volume secure assets. Michael also said pricing gaps or mispricing happening in traditional finance and crypto because of key elements like technology, financial services, and regulations are closely linked and grow together. These gaps exist because these areas are still developing and are not fully synced in. As more assets move onto the blockchain, these pricing gaps will likely shift, making real-world asset tokenizations more appealing to big investors. Michael also said, in time, this will change as digitally native assets originate and securitize on-chain existing capital markets, move on-chain, and all new financial instruments come into existence due to blockchain innovation. Dan, the senior director, and on Cointelegraph's report, multiple CEOs and executives have given their perspectives on real-world assets. So Dan, the senior director of industries affairs at the Blockchain Association, a US trade group promoting pro-crypto policies and regulations, said that real-world asset tokenizations and decentralized physical infrastructure networks, DPINs, are some of the fastest growing areas in the blockchain space. He told Cointelegraph that traditionally liquid assets like real estate, commodities, and private debt can be fractionalized, making them accessible to a broader range of investors while diversifying risk. He added that, I believe blockchain tech further enhances this by offering both transparency and security with clear records of ownership and transaction history. As this adoption grows and digital asset regulations become clearer, this trend is expected to gain momentum, particularly among institutional investors. In 2024, real-world asset sector experienced a significant growth, highlighting the increasing commitment of finance giants to on-chain assets. BlackRock and global asset management leaders announced over $1 billion in tokenized treasuries, with a plan to scale to $10 billion by the end of the year. Similarly, the Assault protocols recently launched on the Polygon networks has targeted TradFi markets with regulated on-chain investments and opportunities in Europe. And these movements are just the beginning, with predictions indicating that real-world assets will dominate capital markets within the next decade. Regarding the future potential for real-world asset projections, such as those from Boston Consulting Group, suggest that the total addressable market for real-world assets of up to $16 trillion by 2030, which is over 2,030 times higher than the current market cap of $7.88 billion. Sergio, Chainlink's co-founder, also gave a perspective on real-world assets to Cointelegraph. He said, essentially projected at the Token 2049 event in Singapore, real-world assets may soon surpass cryptocurrencies in market value, showing the potential of real-world assets to change the finance space as more traditional institutions adapt these assets. The market gains momentum towards a transformative role in the financial ecosystem. Industry estimates vary on the projected growth rates of the real-world asset market space, and McKinsey essentially provides a more conservative forecast of around $2 trillion by 2030. Key drivers for essentially real-world assets, several factors drive the growth of real-world assets, which align with the demands of institutional and retail investors for efficiency, transparency, and broader market access. Tokenization offers substantial benefits, such as our enhanced liquidity by enabling assets like real estate and bonds to be divided into smaller tradable units on the blockchain. This fractionalization lowers the barrier to entry, demonstrating essentially investments opportunities and allowing a broader range of investors to participate in traditionally exclusive markets like real estate and fine art. Blockchain-based tokenization also significantly reduces transactions costs by eliminating intermediaries and enabling faster settlement times. Transactions that take days in traditional markets can occur instantly on-chain, adding liquidity and reducing counterparty risk. This efficiency is particularly appealing to institutional investors looking to cost-effectively optimize portfolios. Also, tokenized assets allow automated compliance, where regulatory essential obligations are embedded directly into the tokens. This reduces the need for manual oversight and enables cross-border investments with fewer administration complexities. Integrating these assets with decentralized finance DeFi protocols also introduces new financial products and revenue streams. By bridging TraderFi and DeFi tokenizations, it leverages blockchain transparency and security and facilitating a more exclusive and accessible financial ecosystem. The growth of real-world assets faces several practical challenges. One of the main issues is the absence of unified verification standards. Currently, real-world asset verification is fragmented, with various protocols and practices lending to efficiencies and increasing the potential for fraud. Spoiler also said that the standardization of verification is important for continued growth and the adoption of real-world assets. Spoiler also went on to say verifying tokenized assets brings challenges in authenticity, ownership, validation, and regulatory compliance. He continued, as the industry, we can help address these challenges through efforts such as setting standards for asset classification, introducing regulatory measures, and implementing third-party certifications. He also added that the standardization of token issuance and custody processes could boost investor confidence and streamline the regulatory approvals. Another big challenge in real-world asset tokenizations is managing custody or safekeeping of both the digital token and the physical asset it represents. This extra step adds cost and complexities, reducing some of the savings that on-chain finances may offer. He also pointed out that custodying is another major hurdle of real-world asset tokenizations, as cost efficiencies on-chain finance are diminished by the need to custody both the digital representation of assets as well as the bearer assets themselves in the case of bonds. He sees custody as one of the main obstacles. He still essentially emphasizes that these essentially issues are being addressed with productive conversations happening between crypto natives and traditional institutions at events like the Real World Asset Summit in New York last month, for example. This inconsistency raises investor concerns as it reduces transparency and trust in custodial management practices. Proving legitimacy is a major challenge with real-world asset growth because anyone can easily create an NFT, but not all NFTs represent actual ownership. Its value is questionable without legal or market recognition, and an NFT is official proof of ownership for physical assets like property or art. This lack of inherent legitimacy is a big hurdle for establishing real-world assets as reliable representatives of ownership. There has been some issues of court acceptance. Courts can transfer ownership of physical assets with traditional documents, but enforcing ownership on the blockchain is more complex. Unlike physical deeds, the only way for courts to compel a transfer on-chain would be to have their own private keys. Without this kind of essential enforceability, it's hard to resolve disputes involving tokenized assets in a legally binding way. The scalability of blockchain technology also poses a challenge. Managing complex assets like real estate requires frequent valuations and updates in compliance processes, which the current blockchain infrastructure struggles to support efficiently. Integrating these processes with traditional finance is technically challenging, as blockchain systems' reliability essentially to meet the demands of high-value asset transactions. Finally, there is the security of the token contracts themselves. Like other smart contracts, these are vulnerable to hacks. If someone hacks a tokenized asset contract, it raises questions about who owns the physical item represented by the token. Securing these contracts is critical to prevent unauthorized transfers and avoid confusion and disputes that could undermine trust in real-world asset tokenization. The tokenization of real-world assets is reshaping the financial landscape, offering unprecedented opportunities for investors and institutions. While growth projections remain speculative, the momentum behind real-world assets is undeniable. By addressing regulatory challenges and technological and scalability challenges, the sector can harness the benefits of blockchain while ensuring security and compliance. As more institutional players engage with this innovative market, real-world assets are poised to be a cornerstone of future finance, essentially climbing traditional assets reliability with blockchain technology and flexibility. So that was the report that Cointelegraph released with multiple CEOs and executives' perspectives on the matter of essential real-world assets. Some were positive, some were a bit more technical on the matter, some were more regulatory matters and issues and so on, and some were genuine reasonings of, what happens if somebody hacks essentially your smart contract? Do they own your asset now? Imagine you tokenize your house and it's on the blockchain. If somebody essentially compromises your smart contract, that house now belongs to that person. How do we find out that originally belonged to you and that you weren't compromised? So there's a lot of issues they're saying that keeps on arising. Now, obviously, there are companies out there that are trying to resolve these issues. And one of those companies is actually Ripple, where Ripple has created through Metaco with HSBC and IBM, they created a custodial service for real-world assets and for keeping assets safe. And so they're hack-free. So some service that Ripple has created, and they've talked about it multiple times. You can go on Ripple's own website and read about it, where they've created a custodial service, for high-grade custodial service, so it never gets compromised. Because there are genuine reasons in the real-world asset space that what happens if you get hacked, someone steals your house on the blockchain? Does that house now belong to him? And does he get the right to kick you out of your own house because he owns the legal binding contracts of your house? So how does that one work? So there are a lot of matters they still need to clear out when it comes to real-world assets. But here's the other side of real-world assets that nobody talks about and that nobody knows about except me, which is there's more to real-world assets than they're telling you. Okay, there are more to real-world assets than the institutions are telling you. Institutions, as I said previously, were happy and still are happy about, essentially transfer in terms of the finance industry going towards blockchain, because payments are faster, they're cheaper, they're transparent, they're scalable, and so on. So they love the idea. Banks and essentially, as I was saying, banks and institutions love the idea of essentially assets being in terms of payment structures, that how payments are going on blockchain because they're faster, they're cheaper, they're more scalable, and so on. So, but they were more excited. Banks and institutions were more excited about tokenizations than payments being faster. And the reason why banks and institutions were more excited about essentially tokenization is because it's an avenue stream for institutions to squeeze money out of the retail section. That is the truth about essentially tokenization. The truth about tokenization is that it's a new avenue stream for institutions to squeeze money out of the retail section. Let me give you an example. If a company wants to essentially build a property, they would have to go to a bank, which they would use some sort of collateral to get money to start in the most simplest way. They would use collateral from a bank. They would go to a bank, use certain collateral, get money as a loan, and then build that building. And then if they're building a commercial building, they'll lend it out to different businesses. If they're building a residential building, they will start letting out each property or selling it off to pay the loan back to the bank. Now, if we do tokenization, it means that any company can essentially buy a land and say, we're going to do a tokenization property where everybody gets to invest and everybody owns a tiny part of this tokenization project from the ground up. Who's really benefiting from that? Because here's what's going to happen. When that building is built with your money and tokenization, this is why banks and institutions are more excited about tokenizations than faster payments, because they were happy with faster payments. Oh, payments are faster and cheaper. This is great. But when the idea of tokenization started coming around, institutions got excited about tokenization because it's a new way to squeeze money out of the retail section. So they said to themselves, look, if we build a building, make a tokenization building, we can get the retail section involved. They will fund the project. We get to own the building, and then we get to remortgage that building and build another building. And they own a tiny fraction of that property. But in your smart contracts, it won't say anything on the lines of, if that building is built and they remortgage it, will you get a profit from that? Hell no. So they get to walk away with a brand new shiny building while you own a small part of that. You helped build that building that they normally and typically would borrow that money from the bank to build to pay it off. That's the side of tokenizations institutions aren't telling the retail section. The side that you fund their projects and you get to walk away proud. I own a bit of this building. A small part of this building is mine. Is it though? Because that institution can remortgage that building once it's built, go to the bank, remortgage it, build another one. Do you get any sort of profits from the remortgaging? No. One example, the Hilton Hotel that was being built in essentially El Salvador. There's a Hilton Hotel that's going to be built in El Salvador where they're building an airport and a Hilton Hotel. It's a tokenization project where people can fund the project through tokenization. The retail section, they can get involved. It's about $1,000 to $400 or $10,000 or $5,000 for entry for tokenization. And what do people get in return for funding that project? $5,000 minimum payment for tokenization. They get a few drinks at the bar. And if you fund more, if you buy more tokenization bits of that building, you get one night stay in that Hilton Hotel. The end result is Hilton gets a brand new shiny hotel. You get a few drinks at the bar. That's the side of tokenization nobody ever talks about. Everybody talks about, oh, this is great. Institutions will talk about, oh, tokenization is amazing. The retail section can get involved. Everybody can be a part of this project. Everybody can, do this and do that. And you can own a bit of this fine art. For example, they're going to be tokenizing, $10 million paintings. They're going to be tokenizing, $100 million paintings or $50 million paintings. They're going to be selling it to you bit by bit. Now you own a bit of this, $10 million painting is tokenized, and you own a small fraction of that. Do you even make a quick buck out of that? Hell no. You might do. They could put it inside of smart contracts. If this painting gets sold, if it's in the smart contracts, you can get paid from that paintings, whatever it gets sold for. But most likely they won't, because institutions. Here's the thing: you got to know about businesses. They're not running charity shops. There's a difference between a charity shop and a business. And businesses don't run charity shops. They're not in the business of everybody make money. Businesses are in the business of competition, of making money for themselves. So they're not running charity shops. So in most cases, they're not going to be writing down in their smart contracts, once the building is built and we remortgage it, you're going to make a quick profit as well. They're not going to be writing down the smart contracts. But they'll sell you the idea that you own a tiny part of that building, which makes no difference to your life. But it makes a huge difference to their life because it all adds up. Because they'll do a minimum payment, like how they're doing for the Hilton Hotel. They'll do a minimum payment. The tokenization of this new building we're going to build, this new residential building we're going to build, it's $5,000 minimum for everybody to get involved for tokenization. Everybody's very excited. Wow, I get to own a tiny part of this place. But what do you get in return? Nothing. In their smart contracts, they might write you get a one-night stay. Is it really worth it? $5,000 for one night stay? The Hilton Hotel, you get three or four drinks at the bar. I don't know if $5,000 is worth a few drinks. That's the side the institutions aren't telling you about, essentially, tokenization. That's the only side they're not telling you about. They'll tell you about the other side. This is great. You get to own a piece of this art. You get to own a piece of this building. Yeah, but you get to own the building. And you get to remortgage the building when it's built. Where's my profit? They walk away happy and laughing. And you were the one that funded the project. Because previously, those institutions had to go to the bank, use collateral, get a loan, build that building, pay back the loan. Now, they buy a land and they'll say, we're tokenizing this project and everybody get involved. At the end, they own the building, remortgage it, profit. You own this much of the building. Would you get a return? Pretty much nothing. You've got to be able to see through the BS. So that's the side of tokenization nobody will ever tell you. But now you know. That is why institutions were jumping up and down, popping champagne bottles on the idea of tokenizations. There were more institutions getting involved in the blockchain sector when they heard about tokenizations. If you check on the news and type in tokenizations, there'll be a multitude of companies going, wow, tokenizations is amazing. Yes, it is for them, not for you. Now, everything comes with a profit. So where's the profit side of tokenizations? The profit side of tokenizations isn't the tokenization project itself. It's the backbone. If you want to be the person that always makes money in those types of scenarios, in any type of scenario, the backbone is where the money is at. You don't make money on site, you make money behind the site. So what I mean by that in the simplest way is, for example, if they're using AVAX, let's say if a bank decides to buy if an institution decides to buy a piece of land, or that Hilton Hotel project, if Hilton Hotel wants to do another project, one they're doing at El Salvador Airport, they're doing tokenizations. Let's say Hilton Hotel buys a piece of land. They want to build another hotel, and they choose the AVAX blockchain, for example. Would you make money if you invest in the tokenization project? Most likely not. They'll give you a few drinks at the bar. You spend $5,000 for a few drinks at the bar. What you could do is, if they're using AVAX as their backbone, AVAX token would be a better option because it brings eyes on the AVAX chain. Brings eyes on the AVAX chain, which adds indirect value to AVAX's token. So you'll make a better profit going for the backbone of the project than for the project itself. If they're going to be using Solana, let's say they buy a piece of land and say, we're going to build a massive residential building. going for the tokenization project itself wouldn't make you a quick buck, but going for Solana would, because it will add indirect value to Solana's token, because people will essentially put more eyes on Solana. While they're building a building and it's going to be tokenized on the Solana chain, it will bring so much eyes to Solana, which makes the token value of Solana go higher and higher and higher, which will add indirect value to Solana's token because of this new business venture. Same scenario on AVAX, same scenario on essentially XRP. If they buy a piece of land and they say, we're going to build this project, a tokenization project on XRP Ledger, going for the tokenization project will make you nothing. But going for XRP token will, because it will add indirect value to XRP's token. Because all the eyes will be on XRP and the value will rise. So in tokenization, don't be fooled by the shiny objects the institutions are waving in front of your eyes and go, "Oh, look at this! Look at this new building we're building. You can get involved in tokenization." But they're the ones that end up with a brand new building that they remortgage and make a profit. You own this much of the building and a few drinks at the bar, because you helped build that building. It's a new avenue stream. Tokenization is a new avenue stream for institutions. That is the grim side of essentially real-world assets that no institution will ever tell you. But you can also make money from tokenization by going for the backbone. If they're choosing AVAX to build a building with on the AVAX chain, going for the AVAX token will make you more money than going for the tokenization project itself. Because if you go for a tokenization project, you're funding to build that building. But if you go for AVAX token, you're on the backbone. You're making money because all eyes are on AVAX. Or if you're on Solana, going for the tokenization project itself wouldn't make you a quick buck. But if you go for Solana's token, which is the backbone of that project, it's bringing indirect value to Solana, it's bringing eyes on Solana's chain, you're going up in value. So that is the side they will never tell you when it comes to essentially tokenization. However, some projects might put it in their smart contracts that if you go into this tokenization project, will give you a certain amount of profits. But the Hilton Hotel tokenization project stated that if you invest $5,000, you own a tiny fraction of this hotel, amazing, and a few drinks at the bar. If you spend $10,000, you get a one-night stay and a few drinks at the bar. $10,000 for one night stay and a few drinks at the bar. $10,000 will go a long way on the chain itself than that tokenization project. So if it comes to tokenization, the backbone will be so much better. And if you really, really want to go for the tokenization project itself, read the smart contracts. See if there's any sort of benefits coming out of it later, or if it's just you own a tiny part of this place and you're supposed to be proud about that. Proud doesn't make money. Always go for the backbone. Because even if it doesn't add direct value to the backbone, in most cases, it will add indirect value to the backbone. Have you heard of Proppy? Yes, I have heard of Proppy. And I wouldn't go near it in any sort of a way. I would never touch Proppy with a 10-foot pole. It's like getting into an ETF. It's for lazy people, pretty much. So that is why, that's the real reason why institutions are happy. They're excited about tokenizations because, and they've mentioned it a lot of times. Here's the thing. There was a report done by the Blockchain Association. There's a report done by the Blockchain Association inside the United States. And they asked a multitude of institutions, what is your number one reasoning for going into tokenization? Why are you so excited about tokenizations? And, you know, essentially they had many people with the responses and the votes the responses got. Some said, you know, the votes for responses were, it's a great idea, it's innovative. In some institutions, the reason why they get involved in tokenizations is because it's innovative. Don't believe that for a second. And there were so many scenarios. But the number one scenario with the most amount of votes from institutions of why they're going into tokenizations, it's a new avenue stream. From who? Retail section. It's because the retail section is going to be funding their projects that they typically had to borrow the money from the bank and use collateral for to pay back the loan. Now they get that money from you by building a shiny building. That is the side of tokenization that no institution on this planet will ever tell you. But now you know. If you want to make money from tokenization, the backbone of the project. If they're building on AVAX, if they're building a building on AVAX, if they buy a land and say we're building on AVAX, the AVAX token would be a better option than the tokenization project itself, because it'll bring eyes on AVAX, which will bring indirect value to AVAX's token. If they're building on Solana, the Solana token will be better because it'll bring eyes on Solana's chain, which means it will add indirect value to Solana's token. If they're building on XRP Ledger, it would be a better option to go for the XRP token itself, because it will add indirect value to XRP token itself, because it brings eyes on the chain. Always the backbone. No matter what you do, always the backbone is the better option. And they might get a few, essentially, institutions coming in and say, oh, we're getting involved in this tokenization project as well. We're going to put, $50,000 down or $100,000 down on this tokenization project to build this building as well. It's just they're trying to get you ramped up, because it will go on the news and they say, oh, this major company is putting $100,000 down for this tokenization project that this other company is trying to build. And everybody will read that and go, wow, this company is investing in this tokenization project. I should go into it too. But they're doing it to get the retail section hyped up to go towards the tokenization. So they spent $5,000 or $10,000 to get a few drinks at the bar. Don't fall for their marketing schemes either. Always backbone. Whatever you do, backbone. Businesses are not in the business of charity. Okay? Businesses are in the business of making money. They're not in the business of everybody wins. What business do you know that has a slogan of everybody wins? No business has a slogan of everybody wins. They're in the business of making money from you. Always remember that. You're always their customers. They're not running charity shops, they're running businesses. So tokenization, and that is why they are excited about tokenization. They were happy with payments. Companies were happy. Banks were happy. Oh, faster payments, cheaper payments. Yeah, that's not a bad idea. That's great. Let's go for it. But when the idea of tokenization popped out of nowhere, every institution was like, oh, tokenization, that's interesting. Let's go for that one. We're excited about that. Let's do that. New avenue stream from the retail section. Because they don't borrow the money from the bank, they borrow it from you. Not borrow it, they get it from you. And they remortgage that building, make more money, remortgage, make more money. Will you ever see a penny of that? Hell no. So don't fool, don't be, tricked by the essentially shiny objects. BS. That's the truth about tokenization. Not a single crypto influencer will ever tell you that. Not a single institution or a bank will ever tell you that. What I just told you right now. That's the truth about tokenization. A new avenue stream for businesses to get money from you. You want to make money on tokenization? The backbone. Not the tokenization project itself, the backbone of that project. Now you know the truth. It's like getting into an ETF for lazy people, pretty much. Opinion on Camel Coin. Stay away from Camel Coin. You will own nothing and be happy. Perfectly put. Now, let's talk about this. So this is what we're going to talk about next. After US elections win. So here's another report that's came out, essentially. You know what? We'll go through this report first, and then we'll go through the second report. So this is the first report that's came out for 2026. So crypto companies are trying to make sure that 2025 is going to remain pro-crypto all the way throughout, which it will. It's Donald Trump, he's pro-crypto, so that's guaranteed. We're going towards pro-crypto. It's guaranteed. Crypto companies are trying to make other politicians still pro-crypto, just in case they don't throw, essentially they try to stop some things. But the good thing is Republicans have majority seats. After US election wins, the crypto industry looks to the midterms 2026. The reporting varies and may still come in all after the elections are called. Many experts said that crypto interest groups and political action committees, PACs, spent more than $100 million through campaigning contributions and media buys supporting opposing political candidates in the United States, a strategy that is unlikely to change after 2024. Crypto companies have came forward and said the crypto companies that are essentially funding politicians is Three companies. Most of the payments is coming from three companies. Ripple, so there's a committee pack. There's a committee pack that's been essentially funded, and this money is going towards campaigning for politicians to put them ahead and keep them ahead and to be pro-crypto. Ripple is a part of this pack of funding into politicians to get them on their side. Coinbase is alongside Ripple doing this, is one pack, and Kraken. Crypto.com has done some investments as well. And there's a few other here and there, but they're the ones leading the pack and putting millions of dollars into it to basically buy out politicians. You want a politician to do something, to pass something, pay him off. In other words, donate to a politician if you want to get a law passed. Politicians don't do anything for free, but if you donate to them, all of a sudden, they'll do it. Now, it seems like these four companies, Ripple, Coinbase, Kraken, and Crypto.com, will want to essentially continue feeding into this politician wallet, let's just say. More than 200 candidates running for the House of Representatives, Senate, and White House who have expressed support for digital assets and blockchain won their respective 2024 races. 200 politicians are pro-crypto. 200 politicians in the House of Representatives are pro-crypto. Why are 200 politicians all of a sudden pro-crypto? Well, because Ripple, Crypto.com, Coinbase, and Kraken have been paying them off to be pro-crypto. Donationing. Ripple, Crypto.com, Coinbase, and Kraken have been donating and helping these politicians, let's just say. 200 of them are pro-crypto sitting in the House of Representatives now. Among some of, and they want to continue feeding into this pack all the way up till 2026, mid-2026. From now until mid-2026, Ripple, Coinbase, Kraken, Crypto.com are going to be putting more money into this wallet that helps politicians see the world more clear. Among some of the, so they want to continue this forward regarding pro-crypto. So politicians, don't go against Donald Trump when he tries to pass something that's pro-crypto. Among some of the biggest wins, crypto leaders claim that would be good for the industry include Republican Donald Trump for US president and Bernie Monero for one of the Ohio Senate seats. The Ohio race was actually incredibly impactful and really proved just how powerful the crypto lobby is now. Exodus chief legal officer, Veronica, told Cointelegraph, adding that hundreds of millions of dollars poured into these races with a pretty large amount of success. This is the net win for the industry for sure. Coinbase has already invested another $25 million towards this politician wallet. That's going to be for 2025 and 2026. Ripple invested about $59 million towards politicians. Even before the election day on 5th of November, industry players seem to be looking at how to further influence US lawmakers and candidates for sure for future races. Before October 30th, earning calls, Coinbase CEO Brian Armstrong announced that the crypto exchange has contributed another $25 million. Brian Armstrong, Coinbase CEO, said he willingly, because it's donations. So he came out and said, we've invested another $25 million into this fair share pack, one of the biggest spenders in the 2024 elections. Coinbase and payments firm Ripple Labs have spent more than $90 million, $90 million combined to the fair share and its affiliates defend American jobs and protect progress for 2024 races. The PAC has claimed it will help candidates on both sides of the aisle who support pro-crypto regulations. This wallet that Ripple and Coinbase have fed into $90 million, $90 million, Ripple and Coinbase, and obviously Crypto.com, Kraken have made their own investments into that same wallet. They said that this money can only be allocated towards politicians that are pro-crypto. That is why you have 200 politicians that are pro-crypto right now in the House of Representatives. The amount of money spent by the crypto industry in this cycle is unprecedented, and seats are terrifying examples of influence and peddling that must be replicated, said Lisa Gilbert, co-president of progressive advocacy group Public Citizen. Their sheer volume spent and its effectiveness teaches other corporate actors exactly the wrong lesson. We cannot sit idly by and wait for other industries to use the same playbook to buy future elections. So one or two politicians are coming out and say, this is wrong. Why are, essentially crypto companies buying out future elections? Please, you're a politician. You work on bribes. I like how politicians sometimes try to use the high ground, the moral high ground, if they have any. Among the priorities shared by many crypto users and industry leaders included removing Gary Gensler, claiming he has adapted an inconsistent and seemingly impossible to comply approach to regulations as the head of U.S. Securities and Regulations and Commissions. Since Gary Gensler was appointed the SEC chair in 2021, the regulator has filed multiple lawsuits against crypto firms, including Binance, Ripple, and Coinbase. So you can see why Ripple and essentially Coinbase are feeding into the same wallet to donate to the politicians. For a very long time, they've been doing this. But they've made recent investments as well for 2025, 2026. They're covering every aspect. Ripple, Coinbase, Kraken, Crypto.com, they're covering the politicians' donations for 2025, 2026, and onwards. The crypto industry has been subject to slander and the narrative that has been unfairly negative. Ripple's chief legal officer, Stewart, told Cointelegraph, I don't see that the industry had a choice but to show up in a very big way to correct courses on all of that. And it worked, and there's no reason that one should think that should stop. Essentially, Stewart went on to say, and he added, investing in the election process in 2024, the industry did see a big and notable way, and I think the return of that investment has proven worthwhile, given the results of the elections. Yeah, because we have 200 pro-crypto politicians, 200 in the Senate now. The Trump second term as U.S. president will end in 2029, but the House members who assume office in January and some senators will be up for re-election in 2026, where the crypto companies and executives will be more inclined to funnel money into candidates at the time it remains to be seen, which they already have. Because there is going to be seats that's going to be happening around essentially 2026 times, Ripple, Coinbase, Kraken, Crypto.com, they've already done that. They've already put more money aside in that crypto wallet that's going to be donating to politicians for 2025, for 2025, 2026, 2027. They're just going in. They're just pouring more money into that and saying, pro-politicians, pro-crypto politicians is what we need, and how you get things done in the political space is donations, not by telling if you tell a politician what to do, the politician will never do it. But if you donate to the politician, all of a sudden he'll open his arms wide open and say, what do you need my help for? It's basically what's happened. And it's a great thing, because so not only do we have a amazing president, Donald Trump, who's pro-crypto, but having 200 pro-crypto senates, what more would you want? That are going to get donates, that are going to be receiving donation money 2025, 2026, 2027, and onwards. They're trying to cover every angle, so nobody goes against crypto ever again. Now, what I'm going to be telling you about is JP Morgan. I'm going to be reading you a report from JP Morgan next. JP Morgan's analyst, Nicholas, has written a report. Now, I've revealed who Nicholas is before on this live, previously, multiples of times. And Nicholas, a JP Morgan analyst, has been very correct on a lot of things inside the market space. He's a very intelligent analyst from JP Morgan. And he's came out with his recent new report on moving forward, how things will look inside the blockchain space. A perspective from JP Morgan analyst Nicholas of how things will look moving forward with a Trump presidency, with a pro-crypto policies and regulations and so on. But before we go through that, let's go start the comment section first. If you do have any questions, put them down inside the comment section. I'll be more than happy to answer any questions you may have. This is a live, which means, if you got a question, go for it. I don't care if they support them with millions of dollars till 2030. Just show me the money. Facts is basically what's happening. So here it is. JP Morgan's analyst. JP Morgan's analyst expects crypto, Bitcoin, and gold to gain under Trump's presidency. This is a perspective from JP Morgan's analyst. JP Morgan's analyst, led by Nicholas, foresees a strong bullish outlook for gold and Bitcoin and cryptocurrencies under President-elect Donald Trump's administration, driven by what they term essentially as a debasement trade strategy. This approach aims to profit from anticipated currency devaluations and inflationary pressures, which typically benefits assets viewed as stable stores of value, including gold, Bitcoin, crypto assets. JP Morgan's analysts also suggest that continued demand for exchange-traded funds, ETFs, geopolitical uncertainties, and major Bitcoins by companies like MicroStrategy will support this trend through 2025. Key drivers behind JP Morgan's bullish predictions. So now we're going to go through the bullet points from JP Morgan's report on the market space that came out today moving forward. A perspective from Nicholas, JP Morgan analyst. Several factors underpin JP Morgan's expectation of gains for Bitcoin, cryptocurrencies, and gold in the upcoming years. The debased trade strategy. The debased trade strategy benefits from policies that lead to currency devaluation, particularly during periods of fiscal policies. As the US dollar loses value, investors often turn to hard assets like gold and Bitcoin and cryptocurrencies, preserving purchasing power, positioning them as an attractive hedge. So if we do go towards any sort of bubble scenarios, then alternative assets will be the scenario to go towards, which means cryptocurrencies will go up in value. Geopolitical tensions and trade policies. Trump's stance on trade tariffs and the possibility of increased geopolitical tensions could lead to further dollar devaluations, adding the appeal of Bitcoin and gold as alternative assets. He's laying out scenarios that could possibly play out, and they're different scenarios. Raising demand for gold and Bitcoin ETFs. The analyst noted that significant demand for Bitcoin and gold ETFs since mid-2023, driven largely by retail investors. As institutional interest grows, these ETFs provide an accessible means of exposure, bringing fresh capital to both assets. MicroStrategy's Bitcoin acquisition plans. MicroStrategy, a major corporate holder of Bitcoin, has announced plans to increase its holdings. This institutional investment, combined with favorable economic conditions, is expected to create an upward pressure on Bitcoin's prices, signaling a confidence among large investors among them. The real gold and Bitcoin as inflation hedges. Both gold and Bitcoin are widely recognized as stores of value that can serve as an inflation hedge in periods of high inflation or economic uncertainties. Investors tend to favor assets that are not directly tied to fiat currencies, making gold and Bitcoin particularly attractive. And here's how each asset fulfills its roles in this matter. Gold historically has been the go-to asset for during periods of inflation and currency devaluation. Its tangible infinite supply makes it a safe haven in times of economic instability and offering stability when other assets might be declining in value. Bitcoin, while it's relatively new, Bitcoin's limited supply of 21 million coins positions it as a digital gold with deflationary characteristics. Investors increasingly view Bitcoin as an inflation hedge, especially as regulatory clarity and institutional interest keeps on growing. Under Trump's administration, certain economic policies could amplify demand for Bitcoin and gold and cryptocurrencies, and here is what JP Morgan analysts highlighted as key areas of influence. The fiscal policies. Trump's prior administration implemented tax cuts and expansionary measures that drove economic growth but also increased federal debt. If similar policies are intact, they could result in inflationary pressures, driving up demand for assets like gold and Bitcoin as stores of value. Increased tariffs and geopolitical uncertainty. Trade policies, particularly tariffs, can lead to currency instability. Bitcoin and gold could benefit as investors seek out assets with less exposures to fiat currencies and fluctuations and trade uncertainties. Support for financial innovations. Trump has previously expressed interest in fostering innovation within the financial sector, which may include support for cryptocurrency regulations. A regulatory environment that favors digital assets could encourage institutional investments, further supporting cryptocurrencies' growth. Growing ETF demand signals institutional interest. The report also highlighted the impacts of ETF demands on Bitcoin and gold prices and other cryptocurrency ETFs. The introduction of ETFs for both assets and other assets have allowed a broader range of investors to participate in these markets, bringing liquidity and stability in key points, including retail investors' demand. Since mid-2023, retail interest in ETFs has surged, particularly for Bitcoin ETFs. These products provide convenient and regulated access to Bitcoin, fueling demand and adding stability to its market space. institutional adoption of Bitcoin ETFs, with major players like BlackRock and Fidelity entering the Bitcoin ETF market space. Institutional adoption is likely to increase, encouraging further investments in the ETF market space, with lower entry barriers for large investors and hedge funds contributing to Bitcoin's mainstream acceptance and other ETFs that are going to be coming through. MicroStrategy's Bitcoin strategy and institutional confidence. MicroStrategy is going to be funding Bitcoin about $42 billion. The next investment coming out of MicroStrategy is going to be $42 billion. They're calling it a 2020, they're calling it a 21-21 plan. They're going to be feeding into Bitcoin, spending $21 billion and another $21 billion. MicroStrategy has been one of the most vocal institutional supporters of Bitcoin, holding significant amounts of BTC on its balance sheets. The company's plans for continued Bitcoin acquisitions reflects a broader trend of institutional confidence in Bitcoin as an asset class. Corporate Bitcoin holders, by increasing its Bitcoin reserves, MicroStrategy is essentially signaling a confidence in Bitcoin's long-term values, potentially inspiring other companies to follow suit. This institutional buy-in could stabilize Bitcoin's price and encourage a broader adoption. Market influence. MicroStrategy's Bitcoin holdings influences market sentiments, as its public commitment to Bitcoins boosts investor confidence and support a long-term bullish outlook. The risk to JP Morgan's prediction. While JP Morgan's outlook is optimistic, analysts have identified potential risks that could impact Bitcoin and gold's performance. Regulatory changes, shifts inside the US's regulatory policies, particularly around digital assets, could introduce volatility to Bitcoin's price. Strict regulations could deepen essentially institutional participation and ETF demand, slowing Bitcoin's growth. Thank God that that's not Trump, because that's essentially because they're laying. So JP Morgan's analyst Nicholas is laying out possible outcomes that could happen going forward. Some are positive outcomes and some are negative outcomes. But the negative outcomes don't really apply to Trump. But they're just laying them out so they can cover both sides if the market goes either way. But this particular outcome, they said, essentially regulatory changes that might be stricter regulations on crypto is never going to happen. It's Trump. He's pro-crypto. He's not going to be strict on crypto assets in any sort of a way. Economic policy, because he's firing Gary Gensler for one. Economic policy reversals. If Trump administration implements policies that strengthen the dollar, such as reducing tariffs or prioritizing economic stability, the demand for Bitcoin and gold as an inflation hedge may decrease. Market volatility. Bitcoin's inherent volatility remains a consideration for investors. Market corrections could impact short-term performance, even with strong long-term fundamentals. The conclusion of the report. JP Morgan's analyst underscores a favorable outlook for Bitcoin and gold and cryptocurrencies under Trump's presidency. But in general, positives and negatives, they're just weighing out outcomes. In general, the conclusion. JP Morgan's analyst, Nicholas, is positive for Trump presidency going forward for the blockchain industry. In conclusion, it's all positive. JP Morgan's analyst underscores a favorable outlook for Bitcoin and gold under Trump's presidency, with expectations that inflationary policies, raising ETF demands, there's going to be a lot of ETFs happening. Once you fire Gary Gensler, there's a multitude of ETFs that the SEC hasn't even bothered looking into. There are 3 XRP ETFs. The SEC hasn't even opened the portfolios to take a look at them. There's 2 Solana ETFs. They haven't even bothered look at. There's a lot of ETFs that's trying to be, that have been filed in with the SEC, but they're not even looking into any of them. The only one they're looking into is the Grayscale ETF, the large fund cap, because they know Grayscale will sue them if they don't. And the last time that happened, Grayscale won, and a Bitcoin ETF happened in January. So that's why the SEC is looking into Grayscale's large fund cap ETF, but they're not looking into the other ETFs because they know Grayscale will sue them straight away and win. The database trade strategy, essentially, they're saying the demand for ETFs, the rising demands for ETFs is going to be happening under President Trump. More ETFs are going to be happening, crypto ETFs and altcoins. And the strict acquisitions by firms like MicroStrategy will drive these assets' growth. The database trade strategy geared towards profiting from currency devaluations support this trend by encouraging investments in assets seen as stores of value in terms of economic uncertainties. If these factors align, Bitcoin and gold and cryptocurrencies could experience a significant gain in the coming years, with Bitcoin's expanding role as a digital store of value, potentially setting new price benchmarks for investors. This forecast highlights the strict values of these assets within diversified portfolios, particularly as the economy navigates potential inflations and currency pressures. So that was the report from JP Morgan. The report was written by the analyst Nicholas, who has being quite positive, essentially being quite not positive, being quite accurate in the past on his market movements. He was very accurate on the grayscale scenario in terms of the Bitcoin ETFs when they first launched, and he explained essentially the scenario before it even happened. So he's been quite accurate in the past, but they've laid out essentially a positive route that's going to be taken moving forward, which is Trump power, Trump presidency means essentially regulations, policies, ETFs, more ETFs, altcoin ETFs. And then you have MicroStrategy and other companies bringing more confidence to the table. Obviously, MicroStrategy only brings confidence to Bitcoin, but that also brings eyes on the blockchain sector in general. But in general, more institutions inside the blockchain sector, Wall Street are part of it, altcoin ETFs, positive. Everything was positive. They laid out some negative ways things can play out, but because they have to cover both sides of the aspect. They can't just come out and say everything's great, everybody let's make some money, and everybody put your money down on crypto. They can't say that because that'll be financial advice. But they can write a report where they cover both sides of the argument, and therefore it can't be seen as financial advice. But the conclusion was very positive. So in general, Trump presidency, Nicholas is saying from JP Morgan, Trump presidency equals to essentially rules and regulations, more ETFs being accepted, more institutions in play, more money into the crypto fields. Massive. And it's already something that we knew, but it's nice to see JP Morgan being on the same lines of us. Now, also, all good things must come to an end, which they did right now. This is the endings of tonight's live. If you're watching this for the first time ever, this was the CMF Live. It stands for Crypto Miles Family. My name is Miles, and I go by the persona of Crypto Miles. I talk about the most recent news that's happening around the world every single night on X Live, if you watch us on X, or on YouTube Live, if you watch us on YouTube. I talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. If you watch this for the first time ever and you're not following me, follow me. If you're not subscribed, subscribe. If you haven't retweeted, retweet this live, like this live, share this live, and get involved in the comment section next time. Or by next time, I mean tomorrow. You can tune into this live every single night, 11:25 p.m. UK time onwards, on X Live, on YouTube Live. Once again, if you're not following me, follow me. If you're not subscribed, subscribe, share, comment, like. We have reached the endings of tonight's live. And also, if you're wondering what my background is in, I have a background in, I have a background in business, law, cybersecurity, and I also own my own blockchain startup company as well. But we'll put that to the one side. But this live is completely free, and this was episode 199 of the CMF Live. This is episode 199. Genuinely, thank you so much to everybody that tunes in every single night. This episode 199. Amazing. Incredible. We also have our own Telegram group, which anybody's more than welcome to join. It's completely free. Everything I do is completely free. I will never charge you a single penny. You can message me. You can call me. You can direct message me. You can join a Telegram group. Everything I do is completely free source. And I will never charge you a single penny. And also, if you're watching this on X, join the X community page for this live. This live that you're watching right now has an X community page, the CMF community page. It's on my X profile. If you go to my Twitter profile, my X profile, click on the community page, the CMF community page, join the community page. Take care, Miles, and CMF. Though, let's go, Ray. See you tomorrow about the same time as usual. Good night, Miles and CMF. Mike, see you tomorrow about the same time as usual. Thanks for the great info. No problem. Slow Flow Digital. Let's go. See you tomorrow, same time as usual. Thanks, Miles, and have a good night, everyone. See you tomorrow. Orphan, see you tomorrow about the same time as usual. Brilliant live as usual, Miles. Night, everyone. Joe, see you tomorrow, same time as usual. Thank you so much, Miles, and good night, CMF. Lena, see you tomorrow, same time as usual. Episode 3. Good stuff as usual, Miles. Much appreciated. Thank you. Let's go, Semper. See you tomorrow, same time as usual. Thanks, Legend. Much appreciated. Night and day to all CMF. Shelly, let's go. See you tomorrow, same time as usual. Oops, episode 200 tomorrow. Yep, well done. Thank you, Butch. See you tomorrow sometime as usual. Thanks for all the great positive news, Miles, and good night, Miles and CMF. Jason, see you tomorrow same time as usual as well, brother. Good night, Miles and CMF. Thanks for all the great news. Free and forever. See you tomorrow same time as usual. I will, once again, if not following, follow. If not subscribe, like, comment, tweet, reshare, everything. I'll see everybody tomorrow. Same timing as usual. Tune in tomorrow for episode 200. Incredible. We're on episode 200. Tune in tomorrow, same time as usual, 11:25 p.m. UK time onwards. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. CMF, have a great day or a good night, depending on where you are around the world. See everyone tomorrow.